We
Shall
can
start?
start. Yes, please.
A warm good evening to the speakers of the evening, Mr. Naresh Kumar and Advocate G.V.S. Ganesh. Brothers and sisters of the fraternity, I welcome you all on behalf of the Southern India Regional Council of the Institute of Chartered Accountants of India. As professionals, we are aware that change is the only constant factor, especially in our statutory compliances and other related laws. The change has been very rapid in the last 4 or 5 years, and we have experienced a lot of change in an alarming yet in a very exciting manner. There have been reforms in different laws in the recent years, and which includes demonetization, GST, Black Money Act, Insolvency and Bankruptcy Code, and labor laws, etc. And we've come a long way. So new laws would ideally mean ease of doing business, but they also mean more rules to learn, new procedures to follow, and this is not necessarily disadvantageous. We have seen the introduction of laws that affect both businesses as well as the common man. So the need to disseminate knowledge is therefore all the more imperative. I welcome you all to this much awaited session on the new labor code and its impact on businesses. In the recent times, one of the laws which has been across the news a lot is the new labor code because of its applicability to its business and its coverage across the nation. So when we look at the history of labor laws in India, it goes back to the pre-independence British era as labor and industrial laws were enacted by the British administration. This was mainly to protect the interests of the British employers and industrialists. And Indian textile industry was actually giving a very tough competition to the British textile uh, industry. And therefore, the British Parliament decided to introduce the Factories Act in the year 1883. So the intent of this introduction was mainly to increase the cost of Indian labor, thereby favoring the British textile magnates from Manchester, Lancashire, etc. As a result of this, the Indian labor got various provisions like stipulated 8 hours of work a day, introduction of overtime wages, abolition of child labor, and restriction of women working at night, and much more. While it benefited the labor market as a whole, but the real motivation behind this was to favor the wishes of the vested interest. The Indian government has been working on a complete overhauling of the archaic labor regulations and to bring them in sync with the 21st century business landscape. Presently, we have more than 44 different acts that cover the labor and employment laws. These acts further have their respective set of rules defining the procedural aspects on how to do, what to do, when to do. And the government has taken steps now, and in order to simplify and rationalize these widespread laws, amalgamated these laws under four principal codes, namely the Code on Wages 2019, which covers the laws relating to wages and bonus, the Industrial Relations Code 2020, and the Code of Social Security 2020, and the Code on Occupational Safety, Health and Working Conditions 2020. Labor and employment regulations have a far-reaching impact on every business organization. Firstly, these are very crucial for a congenial and a harmonious relationship between the employers and the employees. Then the labor and the employee costs contribute somewhere between 10 to 60% of the total cost of any organization, irrespective of whether it is manufacturing, trading, service, whatever it may be. And this will have a huge impact on the cost structure of any organization. And also, the new labor law is going to undergo a lot of changes which may require the organizations to review and revise a lot of employee contracts, compensation structures, registrations, and compliances and whatnot. And under the existing, one of the other reasons that was when we were going through was that under the existing labor law, there are about 12 different definitions for the term wages alone. And this is now proposed to be made uniform under all the four codes. So this will result in a more clear black and white definition of a particular term as against vague and ambiguous terms across all the different acts. And there are some major items which have been proposed, such as increase in work timing from 9 to 12 hours, the definition of amount to be taken for the computation of PF, the term basic salary for the computation of PF, and many more. And this, apart from this, there are a lot of other changes which have been proposed. And we have today here with us very well-known subject experts, Mr. Naresh Kumar and Mr. G.V.S. Ganesh here with us today to guide us and throw light on the various implications on the new labor code on business and its impact on the business landscape. On behalf of SIRC, we welcome you once again to share your experts' insights on this interesting topic, sirs. Mr. Naresh Kumar is a postgraduate in Human Resource Management with an executive MBA from Copenhagen Business School, Denmark, and has passed out his BL from College of Law in Andhra University and MA Sociology from the same university. He has varied experience of over 34 years in different facets of human resource development and industrial relations, moving from a strong employee relations role to a corporate HR role over the years. His core competencies are in leadership development, organization transformation, and change management. He has widely traveled across Europe and Asia Pacific and is exposed to the latest international concepts in people management. He is a certified coach and is also a Hogan graduate. He is conferred with the honor of being among the top 100 most talented HR leaders across the globe by Economic Times now. He is also a visiting faculty to some of the leading business management institutes across the country. We welcome you, sir. Mr. G.V.S. Ganesh is an advocate and in one of the leading corporate law firms in Telangana and Andhra Pradesh, where he advises major MNCs and Indian companies and also represents them before various forums. He has 24 years of overall experience in the field of law, 6 years as a paralegal and more than 18 years as a lawyer. He is a graduate in Commerce and Law from Osmania University. He has been enrolled as an advocate in the year 2002 and has been practicing since then in the High Court of Hyderabad and the Labour Courts and Industrial Tribunals at Hyderabad and other places in the states of Telangana and Andhra Pradesh. He is a specialist in labor laws besides having exposure to civil, quasi-criminal, indirect tax, consumer arbitration, etc. He has appeared in a number of cases before the High Court at Hyderabad, Labour Courts, Tribunals, authorities, and conducted them very successfully. He has prepared and presented papers on various legal topics and delivered lectures at FAPCCI on statutory compliance in respect of HR functions and ICAI, SIRC, Kakinada branch on compliance under labor laws and overview. We welcome you, sir. The stage is yours, sir. Over to you.
Yeah, thank you, Ganesh, for the introduction of both the speakers. Mr. Naresh Kumar is an industry expert, so I thought he's the relevant speaker to talk on the topic of the day. I congratulate SIRC Chennai for taking up this topic for the benefit of its members, which is very necessary. Although the codes are not expected to be implemented in the very near future, as we have seen, in this country, there is resistance for change. You being chartered accountants, you are aware GST, how many years it took for the government to implement, and finally we have seen the light of the day only about 3-4 years ago, and still we are in the gestation period of the implementation of GST. We are facing a lot of issues. So likewise, these codes also are likely to take some more time, because the very thought has been mooted from in 2019. First time the Code of Wages was enacted, and in 2020 the other 3 codes have been enacted, but they have not been notified yet for implementation. And, initially it was said April 1st, 2021 they will be implemented. Then the implementation date was moved to July. Then now we are I'm hoping that by April 1st, 2022 they may be implemented, because most states are not yet ready with the rules which are to be formulated and framed under each of these codes. Now, as I said, Mr. Naresh Kumar is the industry expert, so he'll be analyzing deeply about each code and giving insights into the possible impact on the business and finances of the companies once these codes come into implementation. I as a lawyer, I'll be giving introduction about these codes. In fact, Ganesh has made my job a little easy by giving by bird's eye view about the codes, but still I'll give my conspectus of these codes for the benefit of the members. So next slide.
Yeah. Can you see the slide, Mr. Ganesh?
Yes, sir. It is visible, sir.
Yeah. Please go ahead.
Yeah. So now, for the benefit of the members, today's session has been divided into the following, below mentioned topics. So I'll be speaking on the introduction and overview of the impending changes in the labor laws. The analysis part will be covered by the industry expert, and I'll hand over the session to him, and he will also give us the way forward on the, because although there is not yet full clarity, but still with the available provisions on the code, whatever way forward that is possible, the speaker will, the other panel speaker will give. So coming to the introduction of the labor codes, actually, as Ganesh was also saying, some of the labor laws date back to pre-independence and pre-constitution time, and as the country was progressing, as a measure of amelioration of the conditions of service for the labor, several welfare legislations have been brought in post-constitution, such as Bonus Act, Gratuity Act, and some other acts. In fact, these aspects were in the realms of, before these legislations were brought in, they were in the realms of the negotiation areas between the management and the workers union. So some model employers implemented gratuity schemes, bonus schemes as a part of their long-term settlements negotiated with the unions. So taking spirit of those things, the parliament has enacted these laws, making it mandatory for every employer to extend these benefits of profit sharing bonus and gratuity for the meritorious service of more than 5 years, and so on. So since some of these legislations, which are pre-constitutional legislations, are considered as archaic and not suiting to the current times, so the need for, and actually there are as many as 29 legislations governing this field of labor law. All these 29 are central enactments. So leave alone the state enactments, because this is a subject from the concurrent list. The state legislature is also competent to make laws on this subject. And in Tamil Nadu, we have Tamil Nadu Shops and Establishments Act. Similarly, in other states also, in AP, we have AP Shops and Establishments Act. In Maharashtra, we have Bombay Shops and Establishments Act. And there are some other legislations like labor welfare acts. So leaving aside these state legislations, there are about 29 central legislations. So these 4 codes are going to subsume all these 29 legislations, and they are going to be consolidated into 4 codes. And the the concept behind making them into 4 codes, in fact, even before also, when there were as many as 29 legislations also, we practicing lawyers or those practicing managers in the field of labor law have divided these 29 legislations into 4 categories. One, those which are dealing with the conditions of work or working conditions, and those which are dealing with conditions of service conditions, and those dealing with wage related matters, and the last one being benefits related. So the conditions of work means when you are at workplace, how many number of hours, what is the health, safety and welfare measures which are to be provided by the employer to the workers. Those aspects are called conditions of work or working conditions. Conditions of service means terminations, retrenchments, dismissals in case of disciplinary issues. So those aspects will be considered as conditions of service. These conditions of service are mainly aimed at securing, guarantee of tenure of employment to the workmen and protection against arbitrary removal of employees by the employers. So when conditions of work means Factories Act and other legislations, they come under the category of conditions of work. Industrial Disputes Act, Industrial Standing Orders Act, those come under the category of conditions of service. So the legislations like Minimum Wages Act, Payment of Wages Act, they come under the category of wage-related legislations. And the legislations such as Gratuity Act, the Bonus Act, PF Act, those things come under the category of benefits related. So now the codification is made in such a way that all these respective legislations are brought under four, broad codes, and all these legislations are being subsumed under those codes. So the main object of the codification is to consolidate the numerous labor laws, as many as 29 enactments, and have uniformity in definitions. Because in the previous, the currently existing labor laws, the definition of employee, the definition of wages, it varies from enactment to enactment. There is no uniformity. So what is a wage under the ESI Act is not a wage under the PF Act. And there is a different definition under the Payment of Gratuity Act. So when it comes to computation of the benefits under each legislation, you will have to resort to the definition of that under that legislation so as to arrive at your liability. Now, these codes are aiming at uniformity of definition in when it comes to be it an employee or wage. And the third one is use of technology. Practicing chartered accountants need not be told. Now, the income tax returns, the Companies Act filings, everything is done online now. Likewise, in this area also, the filing of returns and submission of registers, all these things are going to be made online. While I reserve my views on the woes of the chartered accountants and the company secretaries, my friends, they keep complaining about the income tax portal being down for several number of days. There are so many bugs in the MCA web portal. So those woes which are attached to the technology, we may have to live with in this area also. But the use of and introduction of technology is sought to be brought into in this area also through these codes for the ease of the employers. Then the transparency and accountability is another facet of these codes, which is sought to be introduced through these codes. And effective enforcement, because under the current legislations, there are under each act the enforcement authority, the enforcement machinery is being notified. So for our one act, the enforcement machinery is one. For another act, the enforcement machinery is another department. So now, for effective enforcement of all these provisions, the consolidation of enforcement process is also sought to be introduced through these codes. Then the ease of implementation, because under this present 29 legislations, not all the legislations may be applicable to everyone, because some of the legislations are industry specific, like cine workers, building and other construction workers. But implementation, when it comes to implementation, you will have to look at each legislation, what forms I have to file under this legislation, what registers I have to maintain under this legislation. And there is a duplication of maintenance of registers also. So throwing challenge to the employers to, and when it comes to implementation of each act, and you are always at the mercy of the enforcement authority, because he can always come land up at your workplace and say that, okay, you don't have this register. Although you are maintaining a similar register under another enactment, he would not agree saying that this is the same register. So you would still insist and say and record an inspection report saying that non-maintenance of some farm day register. So now with the introduction of these codes, it is we are hoping that there will be an ease of implementation. So mainly the introduction of these codes is aimed at by and large these objectives. So we can say that one is simplification, the other is modernization of the labor laws. That is the main objective of these codes. Next. Now, the word subsumed, I don't think I need to explain a legal meaning, because we being chartered accountants, you have already seen the GST Act subsuming various indirect tax legislations like Excise Act, Central Excise Act, Service Tax Act, and the VAT Acts under the state legislature. So here also the 4 codes: Code on Wages 2019, Code on Occupational Safety, Health and Working Conditions, Code on Industrial Relations, and Code on Social Security. Like Code on Wages, it has subsumed the 4 legislations: Minimum Wages Act, Payment of Wages Act, the Employee Equal Remuneration Act, and Payment of Bonus Act. Then the OHS Code, it actually amalgamates about 13 legislations. Earlier they were all some of them are industry specific, but now they're all coming under one umbrella, and there will be a rules governing each separate industry. Then Code on Industrial Relations. This seeks to consolidate the conditions of service which were earlier regulated by Industrial Disputes Act, the Industrial Standing Orders Act, and the Trade Unions Act, because trade unions is one area which is very crucial in industries, manufacturing industries. In fact, the code also seeks to bridge, the introduction of the code also seeks to bridge some of the gaps, because under the old legislations, because they're all, some of them are archaic also, although I'm using that expression archaic, but they are really archaic, and there are many gaps. So all those gaps are sought to be filled. So particularly when it comes to Trade Unions Act, the Trade Unions Act is made in the year 1926, pre-independence, and it does not govern the field of recognition of trade union by the employer. It only deals with the registration of the trade union and the functioning of the trade union. So now those aspects are also sought to be introduced in this code. And the Social Security Code. Social Security means the ESI, PF, and gratuity. In fact, all the Western, Europe and US, these benefits are called Social Security benefits. So this expression has been coined from the West. Next. So here you have the legislations which are subsumed by each of the code. The Code on Wages, so as I said, subsumes the 4 legislations which deal with so Payment of Wages Act, it's again into 1936 legislation which deals with the payment of wages, the period of wages, and the permissible deductions, all those aspects. The Minimum Wage Act is 1948. It deals with the minimum rates of wages payable to the workman by every employer. And Payment of Bonus Act, it's again, it deals with the sharing of profits by the employer with the workman in the form of bonus, which is payable annually. Equal Remuneration Act. Equal Remuneration Act deals with the payment of equal remuneration to both genders. It prohibits gender discrimination. Likewise, Code on Industrial Relations, it subsumes 3 legislations: Industrial Disputes Act, Trade Unions Act, and the Industrial Employment Standing Orders Act 1946. Then this Code of Social Security, it subsumes this many legislations. The last two legislations, the Building and Other Construction Workers Welfare Cess Act and the Unorganized Workers Social Security Act, those are the legislations which provide for levy of cess, for augmenting the resources for the welfare of the workers working in those sectors. So those cess legislations are also sought to be subsumed in under this Code of Social Security. Then OHS Code, so many acts which are industry specific, like Working Journalists Act, Sales Promotion Employees, BD and cigar workers, cine workers, motor transport workers, interstate migrant workers, plantation labor, building and other construction workers, dock workers. So all these legislations are sought to be subsumed by this code. So now I hand over the session to the expert speaker, and any questions on it has been since the session is a long session of 3 hours, it has been decided that the questions from the members participants against each code or each topic can be taken at the end of the session, and then we answer those questions, and then we move on, so that there will not be any boredom, because the subject itself is a very dry and drab subject. Therefore, we'll try to make it as much lively as possible by making maximum interaction through the questions that we receive from the members, which will be moderated by the organizer. Thank you.
Thank you, Mr. Ganesh. I think Mr. Ganesh has been referring to me as the expert on this subject. I think I must caution you beforehand. We go to Mr. Ganesh's office for any of the legal matters which come up before the labor courts and industrial tribunals or high courts, because we can't appear before those courts ourselves, and they guide us in terms of how do we handle certain cases which are arising out of most of these enactments. Not that we have many cases, but then we do approach them for guidance and also for fighting any of these cases before the authorities which are constituted under these enactments. So that's our association. So that's how it is. And as rightly mentioned by Mr. Ganesh, these acts have become archaic and outdated. And the complaint from the industry basically has been all these years after 1991, when we had this economic liberalization thrust upon us, that the existing laws on employment or the labor laws are not in sync with the economic reality of today's world. Because until 1991, we were a very protected economy. So we were not open to other companies coming in and selling their products here. But then in 1991, when we opened up the economy, the industry started complaining that these are archaic laws. I don't want to get into that. There are many examples on how industry suffered because of these legislation, and also the stands adopted by the courts in India, including the Supreme Court those days. So that was the situation. So 1999, Mr. Vajpayee's government has constituted the second National Commission on Labour for actually revising and coming out with new set of employment related laws, that is labor laws. So the second National Commission on Labour submitted their recommendations, but then they've never seen the light of the day. They were just relegated to the record books, and we were unable to implement any of those provisions because of basically opposition from the trade unions. They don't want their protection which are provided under the enactments to be taken away, and that did not see the light of the day. So what happened was the voice from the industry kept on growing, saying that these are all outdated labor laws. So now what the Modi government did was they dusted all that old material from 1999, the recommendations of Second National Commission on Labour, and then they came out with a new set of laws. Most of them actually are based on the recommendations of the Second National Commission on Labour, that time which was headed by a gentleman called Mr. Ravindra Verma. So what we see is a modified version of these recommendations of Second National Commission on Labour. That means 20 years it took us for us to once again bring back these laws and give out these notifications. Mind you, today we don't know whether these will see the light of the day, because the government was very keen to implement. Then we had the COVID pandemic taking over. Then we said 1st April 2021 we will implement. Now we don't know when this is going to be implemented, because the new labor minister is now having discussions with the trade unions and the managements. Managements had some reservations on some of the changes which are going to come under this code, and the unions have got some serious reservations about some of the clauses where they feel the managements are being given the authority to hire and fire them. So we'll, in the next 2 hours or so, we will take a look at all these provisions. What are these contentious provisions? How they are going to impact the business either adversely or positively? What is that the chartered accountant should be knowing in terms of the impact on financials, in terms of how do they account for some of the past service liability? We will take a look at that. I am not an expert in terms of finance, but then I can talk with some confidence in terms of the laws which are likely to be implemented by this government anytime within the next 3 to 6 months. That is what I'm going to talk. Please excuse me if I'm talking anything wrong on the financials. I did my best to study, including some of the papers published by these actuaries, saying that what could be the past service liability in terms of the gratuity changes happening, the computation of leave with wages. So I'll present all those things to you. Please feel free to ask questions anytime you feel like. So what we will do is we will take a pause at the end of each code. The code on wages will take a pause, we'll take questions, then we will go to code on social security, then we'll go to code on industrial relations, and the last code will be on code on occupational safety, health, and working conditions. So the first 2 codes are very important from a chartered accountant's perspective, and the last 2 codes are not that important, because there are more information which is pertaining to the HR managers and very little towards the financial aspects and things which the chartered accountant should know, except the compliance related matters. We will focus our discussion in terms of these aspects which are of interest to the finance professionals and the chartered accountants. So code of wages, as already pointed out by Mr. Ganesh, that it subsumes these 4 legislations. I don't have to spend time on that. But what is the objective and overview of this code on wages? Basically, the idea is to amalgamate and simplify the legislations. How they are going to do it is we'll have to look at that. It applies to all establishments, employees and employers as defined. So we'll see which part of minimum wages applies to which establishments, which payment of wages act applies to, payment of bonus act applies to. We will go through each of these legislations from a financial perspective, and also to have an understanding in terms of what are these legislations about. So earlier, these 4 enactments were consuming 115 sections in the law books, but they have now been brought down to 9 chapters and 69 sections. So the definitions which are provided in chapter 1 are applicable across all these 4 areas of minimum wages, payment of bonus, payment of wages, and the equal remuneration. So it's a uniform definition of these aspects which are applicable across the code. So the 4 areas, as I've told you, are covered in chapters 2 to 4, and then it also talks about payment of dues, how claims are to be made, what is the role of an inspector cum facilitator, what offenses and penalties. All these things are covered under the code on wages. So let's look at a little bit deeply into these definitions. Employer means, you know, anybody who is having the ultimate control over the affairs of the organization, and includes an occupier and a manager, because some companies, they can't manage everything themselves. People, they appoint directors as occupiers, and they also appoint managers. Those people are supposed to be having the ultimate control over that establishment. And in case of any other establishment, whoever has got the ultimate controller, including which has been contract with an employer. Everything was centered around the principal employer. So if I appoint a contractor will have a good time, and because there is no liability or responsibility on the contractor under any of the enactments. If the contractor fails to do something, the liability is fastened on to the principal employer. But the welcome change here for the businesses is contractor also is an employer under this enactment. This is a major change which has been brought in. Let's look at the definition of employee. Who is an employee? You see, the earlier enactments did not have these dual definition of employee and a worker. Here we need to understand who is an employee, who is a worker. All workers are employees, but all employees are not workers. Please keep this in mind, because there is a subtle difference between who is an employee and who is a worker here. Here, an employee is defined as anybody other than an apprentice who is actually engaged in skilled, semi-skilled, unskilled, manual, operational, supervisory, managerial and administrative, technical or clerical work, whether for a hire or reward. So this is what the definition of an employee says. And it includes a person to be declared as an employee by the appropriate government. Tomorrow, the government has got the authority under this law to declare somebody as an employee. If there is an ambiguity, the government will step in and then say, we declare this category of people as employees. This provision was not existing in the old law. Now, an employee, even the CEO of a company, if he is an employee, is coming under this definition. So we will look at the implications. Managers are employees under this definition. Earlier, it was not the case. There were clear-cut demarcation in terms of which law is applicable to whom. So here, we'll have to understand everybody irrespective of the designation of this individual in the organization. He is an employee. But as I told you, all employees are not workers, but all workers are employees. So let's look at the definition of a worker. A worker means other than any apprentice who is employed in any industry to do manual, unskilled, skilled, technical, operational, clerical or supervisory work. This is the same definition of worker under the Industrial Disputes Act as existing now. What is the difference which is coming here is anybody who is in a managerial capacity is not a worker, he is an employee. So we will talk about why these two definitions have been brought in under this codes. So here, earlier, the working journalists and sales promotion employees were not workers. Because of a judgment of the Supreme Court in May and Baker case in 1969, followed by another judgment of the Supreme Court in Sandoz, India, all the sales promotion employees were declared not to be workers. What is the difference between an employee and a worker? A worker can raise a dispute under the Industrial Disputes Act. He can approach a labor court. He can challenge his termination from employment. He can go and actually put charter of demands on the management. But an employee cannot do so. An employee doesn't have the remedies available to a worker, doesn't enjoy the protection in terms of security of employment in line with what is provided to a worker. But certain benefits are being bestowed on the employee under these enactments, and how it will impact business we will see. So anybody who is in a supervisory capacity, he is supervising the work, he's got some people reporting into him, but if he is drawing a salary of more than 18,000 rupees, he is not a worker. But if he is drawing a salary of less than 18,000 rupees, irrespective of his supervisory responsibilities, he is a worker. So earlier the threshold was 10,000 rupees. Now they are extending it to 18,000 rupees. Establishment definition, I don't have to spend much time. It is any trade, business, industry, manufacture, occupation carried on and includes a government establishment. That's an establishment. Everything comes under establishment. So let's look at another change in the code on wages. They've defined who is a contractor. They've defined who is a contract labor. Earlier, there was no definition in any of the laws as to who is a contractor. Here, because of the modern business practices and the complexities involved, now the legislator felt the need to define very clearly without any ambiguity who is a contractor. Because outsourcing has become the order of the day. If I'm outsourcing my manufacturing operations to another establishment or an individual, and he is carrying out that manufacturing activity in his own premises and he is supplying the goods to me, he is not a contractor. He himself is an employer. That is being very clarified very clearly here. I'll give you an example. What was the ambiguity which was existing in the law? L&T is such a large organization, you know. Some company like ours, which is not even 1/5 of the size of L&T, we hire L&T to do a project for us. All the L&T becomes our contractor. He'll have to go and get a license under the Contract Labor Regulation and Abolition Act. It looks, see, if L&T fails to pay wages to their workmen deployed at our site, we are 1/5 the size of L&T. We are responsible as principal employer. So it is like a large organization becoming a contractor to a small organization. I've seen some cases where Rolls-Royce have taken over they've provided the Rolls-Royce engines to a company. It's called Spectrum Power in Andhra Pradesh. They built the power plant for them and they've deployed expatriate engineers on their site. And Rolls-Royce was carrying out the operation and maintenance of this power plant, which is held by a tiny company called Spectrum Power Generation. Rolls-Royce is a gigantic company. There the labor authority said Rolls-Royce is a contractor, they'll have to take a license. So now the definition of contractor is very clear. Only when this fellow is producing something given result for the establishment through contract labor on the premises of the establishment, then only he is a contractor. Or if he is supplying contract labor to the establishment, then he is a contractor. Otherwise, this toll manufacturing, outsourcing, all these are now away from the ambit of contractor. Then who is a contract labor now? As I told you, in the case of L&T, they have deployed their people on our site for a project. Their own employees, they are our contract labor. How can it be? It is ridiculous. They are being paid wages. They are getting annual increments. They are getting bonuses. Their ESI, PF, bonus, everything is covered by L&T. Now those category of employees, they are no longer deemed to be contract labor. If you read the definition here, if he is hired through a contractor with or without the knowledge of the principal employer, he is regularly employed by the contractor for any work of the establishment, and his employment is governed by mutually accepted terms and conditions, including engagement on permanent basis, gets periodical increments, pay, social security, and other benefits, then he is not a contract labor. Say, for example, Wipro deploys their software engineers in Microsoft. Till now, Wipro is a contractor for Microsoft, and the people, the software engineers or even executives who are deployed on the site of Microsoft for working on the work of Microsoft, they are contract labor. Though Wipro is paying them the salary, Wipro is giving them the annual increments, Wipro is covering them under all the social security benefits. Now this law is actually taking steps to do away with that ambiguity. This is really a welcome change for the business, I would say. So the most important definition in this whole 4 codes, which I believe any HR manager or a chartered accountant should be completely having full knowledge, is this definition of wages. As mentioned by Mr. Ganesh, we had umpteen definitions of wages so far. Because I am able to work for the last 38 years because of this ambiguity. Because my boss, my managing director doesn't know. He will say, oh, payment of gratuity wages, he will say it's different from provident fund. It is different from payment of bonus. It is different from payment of wages. You say the name of the law, the definition of wages is different. It's not uniform. Now this attempt of this legislature is to bring in a uniform definition of wages. It has got its own advantages for the industry, but it's got its own downside also. We will look at those things. how this definition of wages is going to be the one of the major contentious issues for the industry today. And the industry has made representation, CII, FICCI and other ASSOCHAM and other bodies have made representations to the government of India saying that this definition of wages will push up our employee cost. This is what we are going to now look at. Definition of wages, it includes all remuneration, whether by way of salaries, allowances or otherwise, expressed in terms of money and capable of being expressed so in terms of money, whether explained or express or implied, if the terms and conditions were fulfilled, be payable to a person employed in respect of the employment or of work such done in employment. That means payable to an employee. What are the elements of this wage? Basic pay, dearness allowance and retaining allowance. These three are considered as wage. Now, what are the specified exclusions? There are 9 specified exclusions to wages. These are not part of wages. Statutory bonus is no longer a wage. Under the Payment of Wages Act, it is a wage. Value of house accommodation supply, anybody is provided housing and his current bills are paid, light bills are paid, and his medical attendance is taken care of by the company, that is also an exclusion. Any contribution of the management to Provident Fund is not a wage. Conveyance allowance or value of traveling concession like LTC is no longer a wage. Any sum paid to defray special expenses like uniform allowance for those people who are working in the factories where they wear uniform, that is no longer a wage. House rent allowance is an exclusion from wage. Then remuneration payable under any award or settlement with the trade union, that is not a wage. Overtime paid to certain categories of employees, that is not a wage. Commission paid to the sales people and other categories of people is not a wage. Gratuity is not a wage when it is paid at the time of termination. That means either resignation or retirement or dismissal from service. Retrenchment compensation and other retirement benefits and ex gratia are exclusions. I put these things in color, green color, the 9 ones. Why? Because if the basic pay, dearness allowance, retaining allowance normally is not paid in the normal companies, it is paid in seasonal establishments for the permanent employees during the season. When they sit at home, they paid 50% of their wages as retaining allowance. So let's not focus too much on retaining allowance because it is applicable to only to specific categories of organizations. Normally basic pay and DA are wages. Then what does the law says here? The highlighted components should be capped at 50% of the total remuneration. What the companies are doing today, basic pay and DA are 30%. All these 9 allowances are 70%. That is not acceptable any longer once this law comes into force. You need to have 50% of your total CTC coming from your basic and dearness allowance. Unlike the 30%, 35% or 40%, I am not saying companies are not paying 50%. There are few companies which are also paying 50% as basic pay. Rest of allowances constitute the balance of 50%. But if it says here, if these exclusions are more than 50%, then you will have to add that balance to basic pay and DA to make it 50%. So that is the law now. So we'll have to look at our compensation packages, understand how they are structured. Are we in line with this new definition? Because this will have a cascading impact on other things which we are going to look at today. So if it is not 50%, we need to immediately, we'll have to revise our compensation structure, look at our liability in terms of financial burden on the company. Because if it is 30% basic pay and dearness allowance managers will not have. Obviously, it is for the blue collar workers. If it is 50%, 30%, you are paying PF on 30%. You are paying gratuity on 30%. You are calculating leave with wages on 30%. So if it has to be made 50%, your liability will go up. We will look at how the liability will go up in the coming slides. Then there is another last one which says remuneration is in kind to be up to 15% of wages. This is not very relevant except in some of the old textile mills, jute mills, all those things where food grains are given free of cost. These are given in kind. So that should not exceed 15% of wages. So this is what the definition of wage says. Please focus on this, understand this, because the entire code hinges on this. Let's look at this example from what we studied in the last slide. All remuneration you can look at here. In this case, example where I have given, basic is 8,000, HRA 4,000, DA 1,000, medical 3,000, commission 4,000, conveyance 5,000. Total is 25,000 rupees. So what are the exclusions as per the new definition of wage? Out of all these 6 components I've mentioned here, exclusions are HRA, commission, conveyance. The exclusions are working out to 13,000 rupees. 13,000 rupees means it is more than 50%. You agree? It can only be up to 12,500 rupees. So what we need to do is the 500 rupees, which is shortfall of 50% of the total remuneration, should be added and reckoned as basic pay for calculation of everything, for payment of provident fund, for calculation of gratuity, for calculation of leave wages, maternity benefit, retrenchment compensation, layoff compensation. You take anything, any employee benefit should be calculated based on this definition, because this is the uniform definition of wages in the code, except in 2-3 cases where they made some changes. So the total remuneration to be reckoned will be 12,500. So I hope I made it very clear to you how to look at it. There could be many examples, but then one major concern we will have here is it includes some variable components. For example, commission is variable. Every month you will not get 4,000 rupees. On one month it could be 0, another month it could be 10,000 rupees. That means every month your basic wage will keep fluctuating. Overtime wages. Let's say if overtime, excluding overtime wages and other exclusions, if somebody's basic pay is not 50% of the total CTC, the overtime wages is fluctuating. So your basic wage will fluctuate every month. So there is a big challenge here in terms of how you are going to handle this. Change the definition of wages by bringing in technology into your payroll. How do you change your SAP configurations or whatever ERP you are using? How are you going to make these changes? This is one big challenge. Now let's look at this scenario, 2 scenarios here. We looked at one scenario. I am presenting 2 scenarios here, situation A and situation B. Please follow me very closely. Here we have taken care of 7 components from basic salary to special allowance. And we also took an 8th component under the total, which is medical reimbursement. In scenario A, if you look at the total cost to company is working out to 60,000 rupees. In scenario B, it is working out to 60,000 plus medical reimbursement of 3,000. But then in this, if you look at, there are certain excluded allowances from the definition of wages, as we have seen in the last slide. So please go down and look at this computation of wages. Wages as per code is 60,000 minus 30,000. That means it should be 50%. 30,000 rupees should be there. Let me use the pointer here. Yeah, 1 second. So here it is 60,000 rupees, and it should be, the basic wage should be at least 50%. So basic wage should be 30,000 because there is no DA, no retaining allowance here. So it is only 25,000 rupees. So what you are doing here is you are actually rounding it off to, the exclusions are coming to 30,500 rupees because HRA is excluded, LTC is excluded, conveyance and employer's contribution to is excluded. The exclusions are working out to 30,500 rupees. So what you are doing is you are adding that to the basic wage and you are making it 30,000 rupees. So in this case, you are adjusting it to make it 50% of the total CTC. Let's look at situation B. What is that we are doing in situation B? Here the exclusions are working out to 21,000 rupees, 400 rupees. Then if you look at these exclusions, the basic wage as per code is working out to 41,000 rupees, 600 rupees. That means the basic wage as it is because of the structuring of the salary is more. It is more than 50%. If it is more than 50%, you cannot pay PF, gratuity and all on 50%. You will have to pay on the actual basic wage. So here your liability on PF, gratuity, leave encashment, everything will be on 41,000 rupees, 600 rupees. So what we need to do immediately is, before this law comes into effect, this scenario B, situation B, the HR department and finance department should put their minds together and restructure their compensation package so that they ensure that the basic wages are not more than 60,000, more than 30,000 rupees. Here it is coming 41,000 rupees, 600 rupees. It will burn a big hole into the organization's finances. That is what we need to do. It is not that 50% of CTC is basic wages. If basic wages could be more than 50%, you give 100% basic wage. You don't give any allowances, because today our salaries in India are structured basically keeping in mind the income tax legislation. What is that you will get exemption under income tax? Whatever, of course, medical conveyance they have done away with, but still there are certain things which are eligible for income tax exemption, like leave travel concession, house rent allowance subject to certain conditions. So we still look at those things. Reimbursements also, if the employee produces the receipts towards the expenditure where he actually uses that money and provides proof, those are exempted. So keeping in the income tax legislation, we have restructured our salaries. Now the whole thing is going to change. You need to restructure by keeping in mind the definition of wages on one hand and keeping the benefits under the Income Tax Act. So you'll have to approach a dual methodology to restructure the wages so that in no given case your basic wages are more than 50%. It is mandatory that you'll have to keep it at 50%. So let's look at an overview of the code on wages. Now, applicability of minimum wages in terms of the code on wages. Earlier, minimum wages were declared for scheduled employments. There were 1,000 minimum wages across the country. Now, what the new legislation is saying here, whichever category of employees the minimum rates are prescribed, they are eligible for minimum wages. Earlier, if a welder and a fitter is working in a chemical company, his minimum wage is different if he is working in an iron steel company. A welder will have the same skill, but then it depends on the industry in which he is working, because schedule of employments were different. Now the scheduled employments will be thrown out of the window. It is the employee job specific minimum wages which would be declared. Now you look at these overtime wages where I have actually highlighted. Anybody for whom minimum wages are declared, they are eligible for overtime wages. Let's say, for example, societies, clubs, canteens, even the managers are specified minimum wages. A manager in a club, so for example, a Madras club or a Secunderabad club or a Pune club, minimum wages are specified for the managers. So long those clubs were not paying overtime wages to the minimum to these managers. But now the new law mandates whoever are covered under the ambit of minimum wages, they should be paid overtime wages at twice the normal rate. So this is another burden which is going to come on to the industry, where minimum wages are declared for certain categories of employees. So here the more than 1,000 minimum wages are there now across the country. Now the minimum wage government notifications will center around unskilled, semi-skilled, skilled, highly skilled. It will be based on the skill sets of the individuals, the geography in which they are working. If they are working in Mumbai or Delhi or Chennai, they'll have to get an obviously higher minimum wage if they are, if when compared to people who are working with in Coimbatore or Satara or a place like Vizag. And the third factor also is arduousness of the work. How hard is this work? The work is much harder. Say, for example, some people work in a steel plant in front of those furnaces. For them, the minimum wages, because they are exposed to high levels of heat. So for them, the minimum wages are to be a tad higher than the other categories of workers. The government will take all these aspects into consideration while fixing minimum wages for different employments. The next important factor is national floor wages for minimum wage. The central government will declare for each geography, let's say metropolitan city, tier 2 city, tier 3 city, these are the minimum wages applicable. So when once such national floor level minimum wages are declared, the state governments cannot declare minimum wages less than that national floor level. Today, if you look at the minimum wages, when compared with Delhi, you compare with Assam, the minimum wages in Assam are 50% of what is declared in Delhi. So some states deliberately kept their minimum wages rates low to attract industry to come there and set shop. Whereas in some states which are already industrially developed, like you look at Gujarat, Maharashtra, Delhi, the minimum wages are already high. So the state governments will lose that flexibility to set minimum wages at less than the national floor level minimum wages. Keep that in mind. The competition between the state governments to fix minimum rates of wages to attract the industry to come and set their establishment will be taken away. It is going to be uniform across based on the population, all those things that will be determined. And no state can declare minimum wages which are less than the national floor level minimum wages. Applicability to Payment of Wages Act. This is also very important. Please understand. Earlier, Payment of Wages Act was only applicable to people who are drawing a salary of 24,000 or less per month. What does this mean? If my salary is not paid, I am drawing only 24,000 rupees per month, I can take my employer to court and file a case for recovery of my salary. That means only I should get 24,000 rupees or less. Now what the government has done, no threshold, it applies to everybody. That means a CEO has been hired in a company, he is an employee. Normally what happens in some private promoter driven companies, when senior people leave, they don't settle their full and final immediately. If that is not done, these senior level guys can now directly go to the magistrate court and file a criminal complaint against the promoter of the company. You understand this enormity of this problem? This is basically to protect all employees because of some of the sad things which happen in Indian industry. I'm not saying all companies are doing like that, but there are companies which are doing like that. Today, the managers are armored with this threat of going to a magistrate court and filing a criminal prosecution against the promoter of the company if their dues are not paid. Earlier, it was not available. Now these people are now empowered under this code on wages. So what was the wage threshold for eligibility of statutory bonus? As you all know, anybody who is drawing a salary of less than 21,000 rupees per month, basic plus DA, is eligible for payment of bonus. That is decided by the central government for all states in the country. It is a uniform. The bonus has to be calculated by taking 7,000 rupees into consideration. All employees drawing basic plus DA of 21,000 rupees or less are eligible for bonus. Bonus to be calculated by considering his salary as 7,000 rupees. Minimum bonus payable is 7,000 rupees. That's how it was. Now what is the new law saying? The wage limit to be notified by appropriate government. That means Tamil Nadu government will declare People who are getting up to 50,000 rupees will be eligible for bonus, and the Maharashtra government will declare people getting 30,000 rupees of salary will be eligible for payment of bonus. And the wages for calculation of bonus also will be decided by the appropriate government. Tamil Nadu government will say 50,000 rupees is the eligibility and you calculate bonus on 50,000 rupees. Maharashtra government will say 30,000 rupees is the eligibility. You calculate bonus as if the salary is 20,000 rupees. This is okay if you are an industrial establishment having one industrial establishment in one state. What happens multi-unit industrial establishment? The company I work, we have 7 manufacturing units across India. The government of Haryana declares one threshold. The Maharashtra government will declare something else. The Telangana government will declare something else. The Gujarat government will declare something else. That means each employee who is working for me, who contributed to my prosperity, will be paid differently. That is the law. But of course, nothing stops me from paying by taking the highest and giving the same bonus to everybody. But I can't take it as an expenditure which is permissible under the accounts. You will have to take it as a separate thing. That is not a permissible deduction. So this is another complexity which is coming under the new code on wages as far as bonus law is concerned. So now, as we already mentioned, definition of wages, it used to be different. Now it is going to be same across all the enactments. Employer, earlier it was a narrow definition, direct employment only. Now contractor also is covered. Let's quickly go on to the other provisions. Permissible deduction for wages. Please listen to me very carefully here. Earlier, the Payment of Wages Act was applicable to employees drawing a salary of 24,000 rupees or less. Then the last thing says only 50% deductions are permitted from the salary of an employee. That means if an employee is drawing 24,000 rupees, in a month, the deductions from salary should not exceed 12,000 rupees. Whether it is PF or it is ESI, it is income tax, it is whatever deduction, fine, penalty, whatever you call it, or deduction towards loan given to the employee, you cannot deduct more than 50%. Now the same thing has been carried forward into this new law. Then what they did, they've extended this to all managers. Take the case of managers who are drawing a salary of 5 crores of rupees. A CEO may draw 5 crores of rupees. Somebody, the senior management staff, will draw salary of more than 2 crores of rupees. What is their income tax deduction? A person drawing a salary of 5 crores of rupees per annum, his income tax deduction itself is 42%. Then what about PF 12%? What about other deductions? How do you handle it? How can you restrict it to 50% for these people? This is short-sightedness. This is non-application of mind. How can I restrict my deductions for a senior executive in my company when I apply the Payment of Wages Act to him, where the income tax itself is 42% and my Provident Fund deduction is 12%, 54% is gone there itself. So how do I do the other deductions? So this is something we need to wait for the final notification, because the industry has gone and made a representation to the government of India saying that this is ridiculous. How can you tie our hands like this? So then the next provision is, in case of resignation or dismissal from service, the full and final settlement are to be made within 2 working days. Nowadays, companies take as much as 1 month to 2 months to settle the full and final dues, because there are if the company has given me a car, the company has given me a laptop, the company has given me a loan, housing loan, can you do all that settlement in 2 days time? It says anybody who is resigning, you need to do it. Okay, you know somebody is retiring, you will do all those things in advance. Somebody resigned, he is getting relieved. You need to settle his dues within 2 days. Of course, this is a problem for the HR guys, not for the finance people. So this is another thing which has come into the code on wages. So another act which is another provision which is very relevant to the finance professionals, provision on payment to contractors. Today what we expect the contractors to do, we pay the contractors and the contractors pay the workers. Normally that is what happens. Otherwise, if we don't pay that, they don't pay the contractor workmen. The contractor workmen will come and sit in front of the HR department. The HR department will run after the finance department saying that you please pay this bill. Otherwise, all these fellows are sitting on my head. Please release that. Otherwise, the contractor is not paying. So to do away with that kind of a scenario, payment to contractor should be made before the date of disbursement of wages to their workmen. That means if they'll have to disperse their wages to the workmen on the 5th of every month, you need to make the payment to the contractor. That means contractor bills are to be settled well before the date of payment of wages to the contractor's workmen. Earlier there was no such provision. Now this provision has been brought into under the Payment of Wages Act. Outstanding payments. Say for example, if I have some outstanding payments, somebody absconded from the organization, somebody died while in service, the dues are there, I'll have to settle the dues. There is no nomination existing in the name of that employee, or I don't know the nominee's whereabouts. What I will do, I used to keep that money with me, and after 3 years, if I can't find out the whereabouts, I'll have to deposit it in the labor welfare fund. Now what the new law says is, within 3 months, if you can't find about the whereabouts of the nominees or the legal hires, you will have to deposit with the Deputy Chief Commissioner of Labor within 3 months. So it is that fellow's responsibility. He will keep that money with him and he will conduct the proceedings and he will pay the money to the nominees or legal hires. So what one way what is happening is, it is good that we are not going in hunt of the nominees or legal hires, but on the other hand, the money which is lying with us, we need to deposit it with the labor department. This is the change. So you don't have that money sitting in your coffers any longer. So the next point is deduction from wages by way of penalty, fines, or otherwise. Now today, you know, under the Payment of Wages Act, if somebody has damaged something willfully, or somebody conducted some misconduct, resorted to some misconduct, I'm sorry. So you can levy a fine or a penalty on him, subject to 3% of his monthly wages. So you do that normally, and we'll have to give an opportunity to the employee to explain, because it is called audi alteram partem. That means you need to hear a person before you condemn him. It's an Italian maxim. So what you'll have to do under the new law, you want to penalize somebody for some misconduct, you'll have to write to the labor department, I am planning to penalize this fellow and deduct X amount of money from his salary. Please accord approval to me for doing that. According to me, this is not ease of doing business. My employees are my responsibility. I'll take care of their penalties, their fines and all. Who are you to tell me whether I am doing it right or wrong? You can't sit in judgment. This is an obnoxious provision under the new law. Every time I can't run to the labor department and seek his permission. So bonus liability on principal employer. Earlier, if contract labor, bonus is not the lookout of the principal employer. But now what they are saying is, in the new law, if the contractor fails to pay bonus to the workmen, the contractor's workmen, minimum bonus, the principal employer has to pay the minimum bonus. Of course, you can deduct it from his bills. That's a different thing. So this is another responsibility which has come on to the head of the principal employer. Otherwise, this liability was not there on the principal employer as far as bonus is concerned to the contractor's workmen. So let's quickly look at various provisions under the Code on Wages. So as I've told you, it has got wider coverage, the applicability of minimum wages, and we have the under minimum wages, you have HRA is covered under exclusions. So now I'll refer this to a law which has been declared by the Supreme Court of India in air freight case. You all know companies, in order to reduce the PF and gratuity and leave encashment liability, they will divide the minimum wages into basic and other components. Now what we are looking at the wage definition, the basic should be 50% of the excluded allowances, which are part of the compensation package. That means you can no longer bifurcate the minimum wages in the way you were doing earlier as per the air freight judgment of the Supreme Court of India. So what will happen here is, even on minimum wages, my liability in terms of provident fund, gratuity, etc. will increase. The employee cost will go up. Now the next provision, rest day and normal working hours. This is 7 days and rest day, same provisions will apply. Of course, 8 hours work rule still continues. You can stretch it until to 12 hours, but the number of hours of work should be only 8 hours. You can actually have that span until 12 hours. This is being misinterpreted by some of the newspapers, and then they are making a noise saying that 12 hours they can be made to work and all that. There is no such provision under the new code. 8 hours work is the sanctity and the norm as per the new law also. So applicable beyond normal working hours, overtime basically. But then earlier overtime wages were not applicable to managerial employees and supervisory employees. Now if they are declared minimum wages for those categories of employees, they need to be paid overtime for working beyond 48 hours in a week at twice the rate of normal wages. This is another financial burden which will come on to the company. So criteria for determining minimum wages is not very important to us. This is the government's lookout. They will look at the geography, working environment, other things, and then they'll determine there are certain norms which are enshrined under the code on how to declare minimum wages for each category of employment. Then national floor level wages. We have already discussed about this national floor level wages, where we said state governments cannot declare wages which are less than the national floor level wage. So the competition between state governments to declare lesser minimum wages will be taken away because of this. Revision of minimum wages, earlier it said it should be revised. Now it says it should be revised after 5 years of previous revision. Earlier it said it should be revised within 5 years. That means you should revise the minimum wages within 5 years. The new law says it can be revised after 5 years. That's the change actually. Then let's look at payment of wages. What is that the change is coming here? As I told you, 24,000 earlier for coverage. Now all managers, everybody is covered under the Payment of Wages Act, where they can make claims under the code if the employer doesn't pay them their legitimate dues. This will increase the litigation, and this will also help the some of the promoter companies who resort to unethical means by holding up the payments of their managers. So that will not be permissible any longer. So meaning of wages, basically conveyance, allowance, traveling, concession, HRA, remuneration, all these are included in wages for the purpose of Payment of Wages Act. The definition of wage, as we saw earlier, is not carried into Payment of Wages Act. Why? Because even if my conveyance allowance, my HRA, my other payments are not made, I can go to the labor department and claim that. No, not 50% of wages I will claim. That's why they've specifically excluded that definition of wage from Payment of Wages chapter. So payment of wages includes everything as wage. That means if your conveyance allowance is not paid, your HRA is not paid, we can go and make a claim before the authority under the Code on Wages. Quantum of deductions, as I've told you, 50%. As I also mentioned, senior manager, how will you restrict it to 50%? This is a challenge which we need to look at, and hopefully the government will come out with. Time for payment of wages, as you know, daily it should be paid at the end of the day. Weekly it should be paid on the last working day. Fortnightly it should be paid on the second day after the expiry of fortnight. Monthly it should be paid by the 7th of the succeeding month. Earlier we had a bifurcation in terms of number of employees. If there are more than 1,000, you'll have to pay by the 7th day. If it is less than 1,000, you'll have to pay by the 5th day. All that is gone now. You'll have to pay by 7th day of the succeeding month. It's not that people do that. They pay on the 1st of every month or the last day of the month. So if it cannot exceed 1 month, sometimes the new people join on 20th or 25th. We don't pay their salary in that month. We pay the whole thing next month. I don't think that will be a challenge. The government will not be keen. Enforcement authorities will not be keen to penalize us because of this, because it's a practical difficulty. So full and final settlement, as I've told you, within 2 working days, the whole amount should be settled in case of resignation, dismissal, retrenchment, or retirement. Payment of bonus. It still continues to apply to establishment employing 20 or more persons. And minimum rate of minimum bonus is 8.33, maximum bonus of 20% has been retained in the Act. The wage threshold, as I've told you, will be determined by the state government. As I've explained to you, multi-unit establishments will have a challenge. Each state government declares a different rate, and I'll have to pay a different bonus to each individual working in different geographies. So, as I've told you, if a contractor doesn't pay minimum bonus, the principal employer has to pay. Other provisions in terms of the disqualification for payment of bonus. Earlier, if somebody is terminated on grounds of fraud, dishonesty, theft, misappropriation, riotous or disorderly behavior, their payment of bonus can be impounded. Now they've added one more. Conviction for sexual harassment also is now included. Conviction means what? Not termination. If the company comes to a conclusion that a particular individual is involved in sexual harassment and they've terminated his services, you can't stop paying the bonus to him. You should be convicted by a court of law. That means you'll have to file a criminal case against him for sexual harassment. The criminal court should convict him as guilty. Then only you can disqualify him for payment of bonus. This is a new provision which has been brought under the payment of bonus under the Code on Wages. Earlier, if there was a dispute between the trade union and the management in terms of the quantum of bonus, in terms of the allocable surplus or available surplus, the union has raised a dispute. It used to go to the industrial court for settlement. And until the industrial court settled the matter, people were not paid bonus. Now, what the new law says is, if there is a dispute regarding the payment of bonus, the minimum bonus should be paid to the employees during the pendency of the dispute. So this is a new clause. So you can't withhold the entire bonus, minimum bonus to be paid. One thing which I don't like is universities and educational institutions still continue to remain exempted. Today, universities and educational institutions are being run much more than industrial establishments with a profit motive. Why not you extend the provisions of payment of bonus act to them also? Why are they doing some philanthropic or charitable activity? The students are paying through their nose. For example, some educational institutes, even for an LKG, they are charging 4-5 lakhs of rupees. Why you exempt them from payment of bonus? Let them pay bonus. No, this is still exempted for some reasons I don't want to talk here. So co-equal remuneration quickly. Basically, as Mr. Ganesh said, the idea is to ensure that everybody, irrespective of the gender, earlier it was male, female, now it said irrespective of the gender, which means the LGBTQI employees also are brought under the ambit of this Code on Wages. They should be paid equal remuneration. Here also the definition of wage is changed and it includes all these aspects, because you cannot say I will only pay 50% of the CTC in the garb of equal remuneration. You'll have to pay all these amounts to any gender. So this is what is the change which is coming under the equal remuneration part. What are the obligations of the employer under the code? We will quickly go through this. Employer has to pay minimum wages. They are allowed to pay overtime wages. They are allowed to pay the wages as per the time limits prescribed. They can only adhere to the permissible deductions, which cannot be more than 50% of the total salary. They'll have to comply with the limits on working hour, that is 8 hours, and overtime is also prescribed here, and prescribed days of rest are to be given, and registers and records are to be maintained. They can maintain it electronically. Earlier we have to take exemption from the labor department for maintaining it electronically. Now the law talks about you can, if you want, maintain the records electronically, and wage slips are to be provided to each employee. Display of notice board are to be exhibited on all aspects of the code on wages. Within 3 months of anybody's whereabouts not known, or some employee dies, the dues, if we cannot pay to their nominees or legal heirs, we'll have to deposit it with the Deputy Chief Labor Commissioner. What are the offences and penalties under the code on wages? In the first instance, you can see, quickly run through, there is a scope for compounding. That means first instance, if you commit some non-compliance, say for example, we don't pay the payment of wages, we don't maintain the records, we fail to comply with the provisions of the act, like we deduct excess amount from the wages, we penalize somebody without taking approval, we don't pay gratuity, we don't pay maternity benefit. All these things have got different, I would say, penalties under the act. But only thing is, first time if somebody did a non-compliance, it can be compounded. That means you pay some amount as determined by the labor department. It is compounded. There is no prosecution, there is no further proceedings. But if second time it happens, the authorities have got a right to inflict very stringent penalties, which can go as high as 3 lakhs of rupees under the act, and imprisonment up to 6 months. I will not delve deep into this because it is going to be a little bit boring for you, but there are penalties under the provisions which are made quite stringent. Earlier it used to be 2,000 rupees, 5,000 rupees. Now it can go up to 3 lakhs of rupees and imprisonment up to 6 months. Now quickly look at some of the central rules to understand what they're doing. They've adopted 6 criterion for determining the minimum wages. That's not very important to us. And one criterion is a standard working class family will comprise of 3 adult consumption units. That means 2 adults and 2 children comprising of 3 adult consumption units. There is provision for food, clothing, and shelter. And there is also factoring in expenses on utility, healthcare, education, recreation. All those are important for determining minimum wages by the government, and norms for fixation of wages, metros, non-metros, and rural. And you have skilled, unskilled, semi-skilled, highly skilled, and the occupations will be mentioned under Schedule E. The minimum wages are prescribed there. And the dearness allowance, which is part of the minimum wages, which is determined by on the basis of cost of living allowance, that is linked to the consumer price index of Bureau of Statistics, Economics and Statistics, that needs to be changed once in every 6 months, 1st April and 1st October. So this is what basically are some of the key provisions which we are looking at. Normal working hours are 8 hours, but the shift can be stretched up to 12 hours. But working hours are only 8 hours. That means you can consume the 4 hours for rest or some tea break, coffee break, and all that. You can stretch it up to 12 hours. Rest day, 1 day, preferably Sunday, but either 3 days before that or 3 days after that, it should be given like the same existing law. And in case somebody is made to work on a rest day, it should be substituted. If it is not substituted, he should be paid at twice the normal rate of wages. So 50% of deductions, as I have told you, and any penalty, the employees should be given an opportunity to be heard. So payment of dues and claims in death cases, I have told you all this. And earlier, any claim under this minimum wage, bonus, or payment of wages should be made within 6 months. Now they are extending the timeline to 3 years. That means after 2 years, 9 months, somebody can wake up and then say, my minimum wages are not paid 2 years, 9 months ago. Earlier, that provision was not available. The law of limitation was only 6 months. Now it is extended to 18 months. So all those returns, records, and registers have to be maintained. We can use technology, upgrade our existing If you are on SuccessFactors or whatever, PeopleSoft, or you are on some other HR technology, Darwin Box or whatever it is, those needs to be upgraded because of this. So in case of any complaints under the code, as I've told you, the aggrieved can file a criminal complaint under the employee. As I've told you, CEO is not paid his dues. There is a fight between the promoter and the CEO. The CEO can go and file a complaint before a criminal court. But on the other hand, the trade union also can do that. If I'm having a dispute with some trade union on some matter, they can misuse this provision and they can file a complaint against the management saying that they violated the provisions of this act, and please file a criminal complaint against them and prosecute them. This is a very, very draconian provision which can be misused by some, I would say, people who are out to take revenge on the organization. So the last slide on code on wages, what are the compliance challenges? Wages interpretation, as I've told you, the monthly salary fluctuates, and like for example, the commission paid to the salespeople, the variable bonus, the overtime, all these fluctuates. So every month you will have different basic wages for payment of provident fund, for determining gratuity. This is a big challenge for the finance professionals and HR professionals. We'll have to see how we are going to overcome this challenge. Within 2 days, full and final settlement is a challenge. Once again, if we look at this provision, capping of deductions at 50%, as I've told you, for senior level employees where their income tax deduction is 42%. How do you handle this? Payment of to contractors before the due date for payment of wages. This is another new provision which could be challenging for us. State governments coming out with different criteria for qualification of bonus and eligibility of bonus could be a challenge for multi-unit establishments who are having businesses in different states under the same banner. And the timelines for keeping employee records registers are 3 years now, because anybody can make a claim within 3 years. Earlier it was 6 months. So these are some ambiguities and compliance challenges under the enactments. Before we go on to the next code on social security, I would be happy to take any challenges. Me and my colleague, of course, Mr. Ganesh also. Any questions, I'll be happy to answer at this juncture on whatever we have gone through so far. The floor is open for questions.
Yes, we have something 10 questions compiled. I'll share my screens.
Yeah, please.
So it's my screen visible.
Maybe I'll have to click on this. Huh? Yeah, I can see the screen.
Take up on demo.
Yeah, the first question is, the understanding is right. It is 50% of cost to company. Of course, we'll have to take those 9 exceptions to the wages as defined under the code on wages. But it is 1st October, no. 1st October 2001, no. Because Mr. Yadav, who is the new labor minister, earlier the government was very firm on implementing it. But now they are having discussions with both the trade unions and the managements. So I don't see a possibility of this coming into force from 1st October. But what will come into force the earliest will be code on social security, which we will discuss now. Because the government is very keen to implement the code on social security for the unorganized gig and platform workers. You know that, we will see that. So other codes will not come into existence on 1st of October because it's not yet fructified. The discussions are still going on. I think I've answered the second question also. Maybe from 1st of January 2021, if everything goes well. That's my guess. I don't know. I cannot certainly tell you from where, because this was supposed to be implemented from last year itself, but it is dragging some time. Oh, the third question is, how is performance-based variable pay treated? This is a very good question. And commission on sales treated. This is a good question. I have this dilemma, first of all, because the performance-based variable pay, we pay at the end of the year. Even commission on sales, we pay quarterly or we pay annual. So this is part of one of the exceptions to the exemptions to the definition of wage. So we'll have to add this to the salary. Do we divide this into 12 and appropriate it against all 12 months and do it? So we need to wait and see, because the final law has not come into picture. But then what in our organization, what we are doing is, let's say, based on some minimum amount of variable pay which employees are likely to get, we are dividing that into 12 months and we are paying it. And we are saying after 12 months, we will decide the full amount and then we will pay. And sales commission also we are doing like, but this is an ad hoc arrangement. If you ask me frankly, I don't have the solution. You are the finance guys. You are better equipped than me how to handle this. But then this is part of CTC now. And maybe what we will have to do, we take some presumptive amount at the beginning of the year based on the last year's variable pay payment, and then calculate the basic wage and start paying the provident fund on that. And also in terms of ESI also we need to do that. Maybe the government is going to change that, because there is a big hue and cry from CII, FICCI and other employers federations saying that this is completely disastrous for us. One way is it is going to increase our cost. Other way is there is a lot of ambiguity. There is a lot of challenge in terms of implementation. In case of free housing, concessional housing given to an employer owned, are there any provisions for computing? I think we need to follow the Income Tax Act for calculating the value of house accommodation. As far as Income Tax Act is concerned, you know better how to calculate the value of house accommodation. If my company is giving me a accommodation and paying for it, I believe a percentage of my basic should be taken as the perquisite value, and it should be added to my salary for the purpose of computation of income tax. And the company owned vehicle, obviously, if a company owned vehicle is given to me both for the company purposes and also for my personal purposes, depending on the size of the vehicle. Say, for example, I get a company car with a driver. So I think they take some 2,400 rupees as the perquisite value per month, and they deduct income tax from that. So I think that is the methodology we need to adopt here also. You are once again the experts in this domain. I am not a finance expert, but certainly from my experience, I am saying we need to take the perquisite value for both and take that into consideration as part of the wages. That's what would be my answer. Since they have not been notified, the 50% structure will have to be implemented when the notification become valid, is it not? Yes, your understanding is perfect. Only when the notification comes, this needs to be implemented. Medical is a specified exclusion as per the definition, but you have included in wages. See, medical reimbursement. If let's say I have a medical reimbursement, I am incurring medical expenses, I am submitting the bills to the company and claiming that as a reimbursement, that is excluded. But if it is paid as a medical allowance, a fixed sum is paid to me every month, it is not exempted. I need to take that as part of wages. That means, see, what we did as an industry, I am also responsible just to get some benefits to the employees and also to see that we pay lesser gratuity, lesser provident fund. We deliberately kept the basic pay low. It's never 50%. Many organizations kept it at 30, 35, 40%. So we were allocating some money from the CTC towards medical allowance. But we don't ask the employees to pay, to give bills to substantiate that they've incurred that money towards medical. Of course, some companies do that. To that extent, they give them the income tax. I don't know whether that benefit is available any longer. That 15,000 is taken away. No longer that benefit is available. Now, the benefit is available for the definition of wages, but if it is medical allowance, no submission of evidence, then it needs to be taken as for the purpose of exclusions. If it is not 50%, that needs to be added. If LTA in the structure before the end of the year, employee will not be able to submit the bill company. It will be given to be employees to equivalent to allowance. I completely agreed with this. This is one rigmarole I am going through in my company, because we are currently restructuring our salaries in line with our increment cycle. we are breaking our heads on this. So what we decided was we will add it as part of monthly allowance LTA. Let's say, for example, LTA out of 4 years, 2 years, once in 2 years, you slab of 4 years, once in 2 years, we can avail LTA and submit the bills. To that extent, the income tax exemption can be given, and to that extension, but then LTA, if it is part of wage, if it is not coming within 50% of the exclusions, we need to treat it as wages. That's what we'll have to do. But the question is a good question, but the implementation is, one is for the purpose of definition of wage, another is for the purpose of income tax. I think we, as I've told you, we need to balance between these two. What is eligible for income tax exemption may not be eligible to be treated as an exemption under wage. If the overall exemptions under the 9 heads I've given are not 50%, obviously LTA should be considered as a wage for the purpose of arriving at that 50%. But for income tax, whenever the bills are submitted, income tax exemption can be given. Whether we can restructure salary by asking employees to resign and join again, so as to, but why we need to do that? Maybe if you are going to, let's say, reduce some of the benefits, but this is an unethical practice. I would not. And why will anybody employee do? An employee worth his metal will not agree to that, no? Okay, legally you can always do that. You can sever the employment relations and then give a new employment. Nothing stops us from doing that, but it's an unethical practice. I don't have an answer for that in this forum, at least. Is there a minimum number of employees in an establishment? Well, yes, there are minimum numbers. No, for gratuity, it is all those establishments working in factories, mines, shops and establishments, any industrial establishment. It is 10 members. For bonus, it is 20 people, and for ESI, it is 10 people. For PF, it is 20 people. It is all given there in the chapters on the code on wages. There is no change in from the current applicability criteria. What about construction contractors who make weekly settlement by the invoice is raised only after a certain portion of work completed? In that case, how will the payment to contractors be? Maybe you need to release some advance to them. That's the only answer I can give. If the contractor insists, but if the contractor says it's okay, you pay me once in a month, I will pay my workers weekly. I am good enough. Like, say, for example, if I'm hiring a big contractor, obviously he will not expect me. Let's say L&T, I have contractor. He will not expect me to pay. We have one contractor who is a big contractor, a multinational contractor. He will not expect us to make the payment in advance. It's a requirement. But if we have understanding, why should we have to pay in advance, or we release some advance against bills? So payment of bonus to contract employees, what if they are not employed for a whole year? So payment of bonus actually envisages payment of bonus to anybody who works for 30 days in a calendar year, in a financial year. And the minimum bonus payable is 100 rupees. So you'll have to apply the same norm here. If a contractor's workman works for 30 days, you will have to pay the minimum bonus. Subject to 100 rupees, that is an obnoxious amount. 100 rupees, why anybody will get? Bonus limits, etc., to be decided by respective government. Then will this still not have disparity? It will have disparity among states. That's what I'm saying. It's a compliance issue. It's a challenge for organizations which are having multi-units establishments. And how will the company calculate? Yes, this is a challenge. I completely agree with you. I have no, but are linked to office. All these are challenges. I certainly say, because as far as the law is concerned, once it is implemented, we'll have to pay differently. Otherwise, what we'll have to do as a progressive employer, if Maharashtra is declared the highest threshold and highest amount for calculation of bonus, we adopt that across all states, and according to that part of bonus, we allocate it under the allocable surplus. The balance we pay as ex gratia. So we need to come out with some creative ideas here. No? So we need to do that, because we can't differentiate just because one employee is working in one state. And employees can be transferred from one state to another state. Somebody is in Maharashtra where it is a higher rate of bonus and is sent to Tamil Nadu where the government declares lesser rate of bonus. For 6 months he is in Maharashtra, 6 months in Tamil Nadu. It's not okay. So though legally it is correct, but as an employer, can we do that? Because employee engagement, employee experience is very important to us. What if the deductions does not include tax on income or income tax deduction? So that we'll have to wait and see, what the government is going to say. As of now, income tax deductions are included as permissible deductions under the payment of wages provisions of the code on wages. So this is a question which we need to wait for the answers. So as of now, it is included. That's why I raised it as a challenge. Settlement has to be completed within 2 working days. If fraud or any criminal proceeding in court, how settlement will happen in 2 days? See, if any fraud or proceedings are pending in a court, you obviously don't relieve that employee. You will, if you are dismissing that employee from service, whatever amount which you want to withhold, you withhold. Balance you release. Let's say if there is some amount in dispute, and that is in dispute, and then you are going to penalize that fellow, certainly you can do it, no? Otherwise, if somebody is suspended pending investigation into the activities, the provision doesn't apply here. So, but then 2 days is important here. That's what we'll have to look at. Any minimum period of employment prescribed to be classified as an employee worker. Minimum period of employment is already prescribed. It's actually basically, if you're regularized an employee, permanent worker, whether he is 5 days, 10 days, he is an employee. But a worker under Industrial Disputes Act, he should have put in 240 days of work in a period of 12 months. Then only he'll be considered as a worker. But for employee, there is no such requirement. Anybody, let's say he is on the rolls of the company for 5 days also, he is an employee if he is hired on a permanent employment or a fixed term employment. But a worker, to get all the benefits under the laws, he should have worked for at least 240 days in a calendar period of 12 months immediately preceding the date of his employment. It is already there in the enactment, Industrial Disputes Act, and also under the continuous definition under the Payment of Gratuity Act. If it is a prospect to change, when the change comes, we change the structure prospectively. Yes, you can do that, but only thing is you should not be taken by surprise. No, it's better we be prepared, but certainly we have an iota of confusion of what change is going to come. So certainly organizations who want to wait until the change comes, because government is not going to say I am going to implement it from 15th of September. It will certainly give some time when they are announcing the date. You can certainly wait until that day of the announcement from the government. You will at least have a minimum of 1 to 2 months timeline for implementation, and you can make the changes at that time. That's fine enough. If you are going to wait and do it, you can certainly do that. That's fine. Is it the end of the questions?
Yes, sir. I'll give you the present right.
Really go on to the. Can you see my screen now?
Code on social security.
Yeah, can you?
Yes, sir.
Can you see the slide?
Yes, sir.
Yeah, thank you so much. We'll go on to the next because we are running short of time. I'm rushing a little bit faster because I thought 3 hours is a lot of time, but now I understand 3 hours is not a lot of time for these covering 4, because these 2 are important. Other 2 are very limited. The last 2, Code on Social Security 2020. So what is this Code of Social Security? As told by Mr. Ganesh, my co-panelist, it subsumes 9 enactments, all social security enactments, which you have seen, like Payment of Provident Fund Act, ESI Act, Gratuity Act, Maternity Benefit Act, Employees Compensation Act, Building and Construction Workers Act, Unorganized Workers Welfare Fund Act. All those things are subsumed into one big code on social security. It is going to amend and consolidate the existing laws in these 9 areas. And the idea is to provide welfare to these unorganized sectors, the gig workers, and the platform workers. That's the main objective. Not much is going to change for these organized sectors, workers or employees under the Code on Social Security. This is one law which the government want to push through. They have already opened a portal where they already had 1.5 crores of unorganized sector workers registered with their Aadhaar, where the government is very keen to announce welfare benefits or welfare facilities to them expeditiously without waiting for the implementation of the other codes under the labor code. So the first schedule actually captures which are the establishments and industries which are going to be covered under this code on social security. So there are 14 chapters, 7 schedules, and there are definitions which are aligned with code on wages, except for few areas which we will look at. And they've created a social security organization in which this EPF, ESI, all these things are going to be coming together as one social security organization to implement the provisions of this code on social security. That's not very important to us, how the organization will look like. So it covers all those enactments which I have told you earlier. And there are provisions for finance, accounting, authorities, assessment, offenses and penalties, and employee information and monitoring. So let's look at the objectives of this code on social security. Its an objective is to actually provide the social security benefits to the organized and unorganized sector workers, and it is subsuming 9 acts. It's a repetition I am just going through, and the applicability is as per the various provisions which are mentioned. Say for example, employee compensation. It applies to certain categories of employees. ESI, it applies to certain employees based on a threshold limit on wage. Provident fund, it applies to all employees who are drawing a basic and DA of 15,000 rupees per month. So Gratuity Act, it applies to employees working in industrial establishments, mines, factories, all shops and establishments where there are more than 10 employees working. So each chapter is having some specific callouts in terms of applicability. So organization sector workers coverage will be continued, employees coverage will be continued, and any of the provisions of the existing scheme will continue to be relevant until 1 year, as long as they don't contradict with the provisions of this code. Things which don't contradict will continue to be applicable for 1 more year. Then the major change which is coming here is gig. We will look at the definitions of what is gig, platform worker, fixed term employee thing has been brought in here. Earlier, you can have fixed term employees, but you can have fixed term workers also. You know the definition of workers. Workers can be unionized, and fixed term workers can also be now introduced under these codes and unorganized sector. So there will be monetary thresholds like Provident Fund 15,000, ESI 21,000, payment of gratuity, no threshold, but 20 lakhs is the maximum gratuity which can be paid. All these things will be brought under through notifications. Period of limitation is also introduced under this for filing claims, for the authorities to come and inspect and pass in any liability on the employer. Only thing which is missing is under the EPF Act now, there is a provision on international workers. You all know expatriates who come and work in India, and we don't have a social security arrangement with that country. We'll have to cover them under the Provident Fund scheme now. And for them, it is total salary currently. There is no basic DA and all those things applicable. That provisions are not mentioned in the code on social security. We'll have to wait for the schemes to come through, how it is going to look like. Then there are penalties and prosecution which is provided for. Then we will look at an overview of how is this code on social security. This is, earlier it was focused on primarily organized sector. Now it is being extended to unorganized sectors, gig platform workers, home-based workers like those people who work at home, BD rolling. Some women who take clothing and stitch them and give it back to the employer. All those people are now sought to be covered under the welfare benefits of this code on social security. Certainly, it's a good intention of the government to bring these downtrodden, the most exploited sections of this community, to provide them some kind of succor through this code on social security, and where the social security organizations, which are already well equipped to handle these welfare amenities to these people who are hitherto not getting any benefit under the existing social security code, which are just relegated to the organized sector. So applicability of the provisions of provident fund is it's applicable to establishments with more than 20 employees, unless the government wishes to apply it to establishments with less than 10 employees also. And if I'm covered under provident fund, whatever my salary is, pension and EDI is covered. Now they are excluding the pension and EDLI to those people who come out of the purview of provident fund. This is something which we'll have to wait and see. Earlier applicability of ESI 21,000. Now the government has to notify whether it is going to be 21,000. Last month, the Labor Department came out and then said they are going to extend this coverage beyond 21,000 rupees. So more people will be covered under ESI. Our ESI 3.25% contribution will have to be made in respect of those people also, if this is now extended to 30,000 rupees per month. That we'll have to wait and see. The notification is there to come. The government has just come out with some announcement of their intention to do so. Gratuity, it is applicable to regular employees. Fixed term employees are not covered. Now the change in this law is fixed term employee can be appointed for 1 year, and after 1 year his contract of employment comes to an end. But then this fixed term employee should be extended all benefits as applicable to a regular employees, irrespective of that eligible service. That means if a fixed term employee we have appointed, he completed 1 year, we will have to pay him the gratuity at the end of 1 year. So now even expatriates come and work in India, international workers, we pay them top dollar salary. They work for 2 years, 3 years and go away. We take them on fixed term employment. Now we don't pay them gratuity. In the new law, the fixed term employees also are eligible for gratuity. Even expatriates are eligible for gratuity. You may ask me why. Gratuity, there is no eligibility limit for salary. Even a CEO drawing 5 crores of salary is eligible for gratuity. Of course, there is a limit of 20 lakhs of rupees, which normally companies don't impose. The maximum gratuity payable is 20 lakhs. But several companies have got beneficial gratuity schemes. Gratuities, some companies pay gratuity as high as few crores of rupees for people who worked in senior positions in their companies. That's a tool for actually retaining the senior level competent people in the organization. Now this is another challenge, which it's a financial burden on the organization because of this new provision. Now wage definition is across all, and we need to now review our compensation structure to look at our liability, additional liability in terms of PF, gratuity and applicability of ESI. I'll show you those examples as we go through with numbers. The existing schemes, for example, they are valid for 1 year, as I've told you, which we already discussed, if they don't contradict any of the provisions of the new Social Security Code. International workers, earlier they are to be covered under PF. Now there is no reference to international workers, but under, if they are on a fixed term contract of 1 year, 2 years, 3 years, we'll have to pay them gratuity. Earlier they were not eligible for gratuity under the laws of the land. Contractor is now very clearly defined under the law, which we discussed on our first slide. Gratuity for working journalists, there is, if you are, any of you are from the media companies, any TV18 or Indian Express or Times of India or any publication, the working journalists earlier were eligible for gratuity along with normal employees only after resigning and putting in service of 5 years. The only exclusion was if a working journalist resigns on grounds of conscience. I don't know what is that grounds of conscience. That means my conscience, say for example, a particular channel is anti-government. This working journalist doesn't like that approach of the channel. He says, my conscience doesn't agree you are taking this kind of a stand. So I am resigning on grounds of conscience. He has not completed 5 years of service. He is eligible for gratuity. Now the grounds of conscience and all are taken away. It says working journalist will be eligible for gratuity if he completes 3 years of service as against the normal 5 years of service for all categories of employees under the gratuities provision. Let's look at the definitions and their impact on this code on social security. Now, earlier Provident Fund Act, existing laws, what is the definition of wage? Basic DA, retaining allowance, and cash value of food concession. Now all these are now getting, all these were earlier excluded. HRA, overtime, bonus, commission, all these are excluded. You all know Vivekananda Vidya Mandir case. Until February 2019, we all were paying Provident Fund contributions only on basic and DA. But then Vivekananda Vidya Mandir case, the Supreme Court full bench came out and then said all allowances which are universal and which are paid as a matter of routine to all employees should be considered as basic wages. They cannot be excluded. Then what we did, conveyance allowance, whatever allowance, washing allowance, all came under the purview for determining the Provident Fund contributions. So this is the earlier status. Now we'll have to apply that formula of CTC minus 50% should be allowances, balance should be basic wages. But if basic wages are more than 50%, you need to pay contributions and you need to pay gratuity on 50%, 60%, 70%, whatever the case may be. So earlier all remuneration paid in cash, it includes and excludes perquisites employee. Now 50% applies here. That means your contributions under Employee State Insurance Act will come down than earlier. But more people will go under the ambit of ESI, because for coverage you are taking the entire amount. If you are looking at 21,000 for coverage, you are taking the whole salary. Now 21,000 rupees salary is now becoming 11,500. Let's say somebody is drawing 24,000 rupees. He was outside the ambit of ESI. Now what is happening? His salary becomes 12,000 rupees. He goes under Employee State Insurance Act and you pay a contribution of 3.25% on behalf of employer. That means it's an additional liability. So for people who are in the ESI scheme already, your contributions will go down, but new people will enter ESI scheme because of the revised definition of wages under the uniform wages definition under the codes. Maternity Benefit Act also, what happens earlier, it has to be paid on the entire salary excluding incentive bonus, overtime wages and employer contribution. Now what you are doing, you're only paying on 50%. The maternity benefit payable to women employees will come down. Your liability on maternity benefit will come down. We will look at it with examples as we go. I'm just giving you a perspective right now. And Payment of Gratuity Act, basic plus DA is what we used to take for payment of gratuity. It was excluding bonus, commission, HRA, or now all that we'll have to take. Our gratuity liability will go up. And gratuity liability goes up. It is one of the biggest liabilities which this new code is throwing on us. Because you have employees working for you 20 years, 25 years, 30 years. All of a sudden, their past service gratuity will go up tremendously. We will look at those examples as we go through these slides. If your current basic plus DA is 30% of your total CTC, what would be the impact if you make it 50%? Your impact on actuarial valuations will be as high as 56% more. In our company, where we calculated our past service gratuity liability, in case this new definition comes into picture, our past service liability is 38 crores. Then this is a challenge for us. How to use this AS 19 to handle the accounting. We will look at those things as we go through Social Security Code. Employee Compensation Act, any privilege or benefit which is capable of estimated in money, anything except traveling allowance, traveling concession, employer provident fund to contribution is excluded. Now what is happening? CTC 50% only you will have to calculate. That means if some employee gets injured, his compensation will go down. But of course, government will not keep quiet. They will change all those thresholds and calculation methodology to protect the amounts payable to the employees. But we'll have to wait and see whether they will allow that flexibility to reduce our liability on these aspects like ESI, employee compensation, maternity benefit, where there is an upside to the organization in terms of cost. So all these definitions will be thrown out of the window once the new codes comes into picture, and the wage definition which we have seen will apply to all these social security areas. So let's look at employees provident fund first. It applies to all employees, establishments with more than 20 employees. International workers are now not mentioned, as I've told you. International workers where there is no social status, social security arrangement with that country. I think we have around 18 countries with whom we have this social status, social security arrangements. We need to pay contributions for them, 50% on wages. Then earlier it was on 100%. So your PF liability on international workers will come down by 50% if the government still upholds the definition of code on wages, which is uniform. Contribution, as you know, to Provident Fund to be done at 10% by some establishment, but 12% for notified establishments, and maximum 1% towards EDLI, administration charges, and it is 0.25 is EDLI, employees deposit linked insurance. So all those schemes under PF pension, EDLI are to be framed, and manner of contributions, recovery, all that has to come through now in the days to come. So the rate of contribution aligned to current provisions now. The differential rates to be notified for any class of employees. That means the government can actually notify different rates of contributions for class of employees. Some class of employees, they may say the contribution should be 5%. Some class of employees, they may say the contribution should be 12%. I'm just making an estimate. I don't know whether they will do that, but the government is armed with that provision. So contractor, if he doesn't have his own code number, the principal employer is liable. Like earlier, we'll have to pay the contributions in the first instance as a principal employer, but we can recover that amount from his bills every month. The period of limitation for the initiating inquiry by the Provident Fund organization is 5 years, and 2 years for completion of this same. As chartered accountants, you must be knowing these 7A inquiries, quasi-judicial inquiries, which the Employers Provident Fund organization initiate against companies for non-payment of contributions, short payment of contributions, in the name of non-compliance of some of the provisions of Provident Fund Act, in the garb of non-cooperation with the department, in the garb of not providing documents to the department, all that authority they had, there was no period of limitation of 5 years. Baba Azam Zamana ka litigation also they can have, and that has become a tool in the hands of the Employers Provident Fund organization. With all due respect, some of them used to harass the employers by resorting to 7-year proceedings. But then the government came out with a notification giving guidelines on how 7A inquiries are to be initiated. They have brought in technology. They wanted to reduce the harassment on the employers. Now they are actually bringing it under the ambit of law, so that after 5 years, you can't initiate any proceeding against the employers on any grounds. Earlier, it was open-ended, 10 years, 15 years, anything you can raise, and we don't have records of that. And then we'll have to be at the beck and call of the quasi-judicial authority, who will be an assistant Provident Fund commissioner in the Employers Provident Fund organization. This has been attended to to facilitate ease of doing business. Employee state insurance we will look at now. Employee state insurance, what it says is it applies to every establishment with 10 or more employees. And for example, earlier it is 10 or more employees. But now if a factory is carrying out hazardous process, even if they have 1 or 2 employees, it is applicable to them. So life-threatening and hazardous processes, the number 10 is not applicable to them. It extends to all establishment irrespective of notified areas. Earlier, there should be a notification because an ESI office, ESI dispensary, is to be established. Now that has been done away with. Every geographical area across the country in India will now be brought under the ambit of ESI scheme, and the government is ramping up the ESI infrastructure to cater to this requirement once this law becomes enforceable. As you all know, it provides for sickness, pregnancy related, that is maternity benefit, dependence benefit, medical treatment benefit, funeral expenses, some unemployment benefits. They are all envisaged under the employee state insurance scheme. So everybody who is covered as per the eligible salary, they will have to be covered under the ESI scheme, and the burden of covering them or the responsibility of covering them is on the employer. So let's look at the other provisions of the ESI scheme. For example, we had an accident in HPCL a few years ago. There were some contractors, workmen working there. There were some fatalities in that accident because the LPG escaped into the atmosphere. It caught fire because of the canteen. Several people died in that accident in the HPCL Vizag refinery. When some of the people who died in the accident, the ESI authorities realized they were not covered under the ESI scheme. So what they did at that time was their families should be given the benefit, ESI pension, the other dependents benefit, all that has to be extended to them as a social security measure. Though they are not covered under the ESI scheme, as a government under the directive principles of state policy of the Constitution of India. So they did that, and then they charged HPCL for all the amount which went into crores of rupees. Now they want to make it into an act, saying that if I don't cover somebody under the ESI scheme deliberately, that fellow meets with some accident, or that fellow meets with a death, all that which is payable to that fellow to his dependents for lifelong will be recovered from us in a lump sum. So this liability they are passing on the employer. So they are putting a premium on compliance. You need to comply, otherwise there are going to be consequences. Unfortunately, something happens to some of those employees who are to be covered under ESI, but to cut corners, we have not covered them under ESI. Kya hoga? Nothing will happen. What is ESI? Then something goes wrong. Unfortunately, we will pay a huge price for that, and it will have a debilitating effect on our financials, especially if it is a small industrial establishment which cannot cushion that kind of a liability. Contributions has to be paid on the last day of the wage period. This is primary responsibility for payment of contribution is on employer, and that has to be recovered from the employer. It is existing already. There is a change on notional extension of employer's premises. As you know, there has been a lot of the decisions of the courts. What is notional extension of employer's premises? That means if somebody is coming from their home to office and they meet with an accident en route, is it an extension of employer's premises? Whether that employee is eligible for compensation under ESI or employee compensation? That was a big question. For many years, the courts have said, yes, they are eligible because they were there on the public place, because they were traveling to reach their place of work. So the liability is there to pay compensation in case of death, in case of disability. All that was being said. Then the courts went ulta, and then they started saying no, unless the employee is working in is traveling in a transport provided by the employer exclusively for shuttling, commuting between the residence and the place of work, then only the liability is arising. Now what the new law is saying is they are giving a different definition to this employees notional extension of employer's premises. They are saying if there is reasonable nexus between the accident when the employee is traveling from the place of his residence to the place of work, then it can be treated as notional extension of employer's premises. This is a change which is going to take place once this new code is implemented. The main thing I have told you, there are schemes, welfare schemes for gig platform unorganized workers, which are to be framed for providing them benefits under the code, like the disability benefit, medical benefit, unemployment benefit, medical insurance benefit to the individual and their family members. All those are on the anvil for this gig platform and unorganized workers. Let's look at this gratuity provisions. All the provisions have been taken into this new code, earlier provisions. Then fixed term employment is included, as I've told you. If it is 1 year, 2 years, 3 years, irrespective of 5 years of service, gratuity to be paid to these fixed term employees. So we have already discussed there. And whichever establishments are exempted under the Payment of Gratuity Act will continue to be exempted. That means my company is having better facilities than the Payment of Gratuity Act. The government has given me an exemption. I also got an exemption from the income tax authorities. Those will not change. They will continue, because I will continue to extend better benefits to my employees under my employee group gratuity scheme. Then I will continue to enjoy that exemption under the new code also. The wage definition is widened, as I told you. Earlier basic plus DA. Now 50% of CTC. This is one big liability which is going to come on the organization, especially old organizations where they have employees working for years with them and where they pay gratuity on the full salary. That means basic, on the full basic. Let's say you have a manager who is drawing 1 crore of rupees of salary and his monthly basic pay is 3 lakhs or 4 lakhs of rupees. You are paying gratuity on that, and you are not limiting gratuity 20 lakhs as per the act. Then the liability will multiply. We will look at that, how it is going to ensue. Now, one more thing which has been brought under this new code is compulsory insurance under gratuity. Earlier, that provision was existing under Section 5A of Gratuity Act, but that was never implemented. It was not given effect to. Now, if they give effect to, what happens? Invariably, all organizations will have to take a gratuity insurance with the LIC or any other agency and park funds there based on the actuarial calculation. That means your cash flow will get impacted now. The idea is here that some unscrupulous employers who close down the establishment, the employees are left in the lurch. They don't get their gratuity because nothing is left. Everything is siphoned out from the company. So the idea is to protect the interests of the employees. Like, you know, in Kingfisher, what happened? Just an example. They were on the streets. They did not get their full and final settlement of benefits. So let's look at the impact of this code on social security, on gratuity and maternity benefit. I've taken this example here. Basic pay, it is 40% of CTC. 4,80,000. Total CTC is 12 lakhs. So you have house rent allowance, leave travel concession. House rent allowance is 50% of basic pay. Normally, that is what people do. In non-metros, they will do 30% or 40%. In metros, it is generally 50% of basic pay. Leave travel concession, 1 lakh. Fuel reimbursement, 1,20,000. PF contributions, 57,600. Statutory bonus, 1 lakh. Special allowance, 1,02,400. Here, earlier, what we were taking for the purpose of gratuity, we were taking the basic pay only. 4,80,000 only we were taking for the purpose of calculating gratuity. Take the case of an employee with 7 years of service. How is this gratuity calculated? 4,80,000 divided by 12. That means his monthly salary is 40,000 rupees. Based on the judgment of Supreme Court in Lalappa Lingappa case and subsequently amended in the Payment of Gratuity Act, you will have to take the last on pay divided by 26 and 15 days of gratuity for every completed year of service. If you do that, the gratuity payable to this individual in this case works out to 1,61,538 rupees. Now take the case of this individual, the same salary structure is existing for him, or there are few changes, let's say we made where the special allowance there is a change, but entire CTC is 12 lakhs, but basic is 4,80,000 rupees. Now what is happening? The CTC, the basic, all these are exclusions, and they are more than 50%. They are working out to more than 50%. It should be 50% of this. That means it should be 60 lakhs. There is a shortage of 32,000 from exclusions. You will have to take this amount to make it 60 lakhs. You made it 60 lakhs here, divided it by 12. You got 50,000 rupees monthly base salary. You calculate the gratuity. Gratuity is coming to 2,01,923 rupees. 23 rupees as against 1,61,000 rupees. That means there is an increase of 40,000 rupees gratuity for an employee whose cost to company is 12 lakh rupees and 7 years of service. Take the case of people who have salaries of 50 lakhs, 60 lakhs, 1 crore, 2 crores. They have 20 years of service. What will happen? What will your burden look like? It will grow. Manifold increase will happen because of this changed definition of wages. Now let's look at maternity benefit. Maternity benefit earlier, what you are removing from maternity benefit? Provident fund contribution. If you remove provident fund contribution, what is that amount? 10,43,400 rupees. So it is 86,950 rupees per month. Now once again you will have to apply that 50% rule. The maternity benefit will come down to 50,000 rupees. Earlier this woman, she is getting 86,950 rupees per month as maternity benefit during the period of our maternity leave. Now she will get 50,000 rupees. But what government will do now is, when they come out with the scheme, they will change the methodology for calculation. We'll have to wait and see what they are going to do to protect these women employees. On one hand, gratuity is going to increase, but on the other hand, maternity benefit is going to reduce. But there is not much of maternity benefit you give to women employees unless it is an IT company where you have young women employees working for you. But gratuity, the liability is going to be much more than any other scheme under the new code on security, code on social security. I've just taken some information which is provided by an organization called Universal Actuaries. I don't know how many of you know this organization. I am a novice as far as actuarial calculations are concerned. You will have to take this with a pinch of salt. If there is anything wrong, you need to excuse me for that. I've studied this. I've spent time to understand this. They did a survey of 450 companies across India to understand what is the current CTC versus the basic pay. For example, in automobile industry, they realized 49% is the basic pay against the total CTC. In manufacturing, it is 49% on an average, not all manufacturing companies. In pharma and healthcare, 46%. The lowest being FMCG, it is 31%. After that, it is real estate, 37%. And ITES is 38%. Service industry is 38%. This is the current situation in the Indian industry. This is a representative sample. So each one will have different impact of this codes on their financials. Let's look at that. This is what is going to be the gratuity liability in terms of their actuarial calculations. Let's say companies which are having 30% as their basic salary and they limit their gratuity to 20 lakhs as per the Payment of Gratuity Act. They don't pay more than 20 lakhs. Even if the calculation comes to more than 20 lakhs, they restrict to 20 lakhs. Their liability will increase by 52%, actuarial liability for the past service and the service ahead of them. And for 35% basic pay, the increase will be 36%. Actuarial liability will increase by 36%. If it is 40%, the actuarial liability will increase by 21%. If it is 45%, it is going to be 11%. If it is 50%, it is zero. There won't be anything. I don't have to say that. But if there is no limit on the payment of gratuity, if it is 30 lakhs, 40 lakhs, 50 lakhs, they pay them. then the liability is much more. For 30% basic pay companies, 56% is the liability. For 35%, it is the 43% additional liability. For 40% companies, it is 25% additional liability. For 45% basic pay companies, it is 14% actuarial liability. So any increase in gratuity salary, you will agree, will have a compounding impact on the gratuity liability, because you have to reckon the past service for the purpose of calculation of the gratuity based on the increased definition of wages. You can't say for the past service I will reckon it as the existing basic salary. For the future, I will calculate it based on your last drawn salary. The federations of employers, FICCI, CII, and others have made a representation to the government to provide for a grandfathering clause. That means for the past, don't fasten the liability on us. For the future, it's okay. We will accept the liability. The government is still considering that. But then the labor minister, the erstwhile labor minister, came out and said, we are not going to accept that grandfathering clause. You will have to pay the gratuity as per the new definition of wages under the code on wages. So we'll have to keep our fingers crossed and wait for the announcement of the government on how the liability will look like. This liability which I have presented here, as per the existing law, as per the existing proposed law, I'm sorry, which is not yet given effect to. There is another thing which we need to look at, actuarial liability. Some companies do permit accumulation of leave, though it is not legally required under Factories Act or any other enactment. Leave need not be accumulated beyond a particular period. But some progressive organizations, they allow accumulation of leave to 180 days or 240 days, because you have that subject. Of course, income tax is only restricted to 3 lakhs income tax exemption on leave encashment once in your lifetime. But then they allow people to accumulate this as a retirement benefit, or when they leave, they can encash this, and also to control absenteeism and run the organization with as limited a manpower as possible. There are both sides benefits in case of leave encashment and allowing them accumulation of 180 days or 240 days. Now what happens? Earlier we were paying leave encashment on basic pay. Now we'll have to pay leave encashment on 50% of CTC. Now what is the increase? We'll have to pay for the past accumulation of leave here. As you all agree, I may have 100 days of accumulation of leave in my account. Now what will happen here? If my existing basic is 30%, my actuarial liability will increase by 32%. 35% it is 23%. 40% basic it is 16%. 45% basic it is 9%. So now what the options before us is, you say we are not going to allow 180 days and so forth. Whatever is there as per the existing basic, we will encash it. We will only restrict it to 30 days of accumulation or 45 days of accumulation as per law, and that will allow you to encash. So that is one way of coming out of this past service liability before the act is implemented. Once the act is implemented, you can't do that. Before the act is implemented, we need to take action on this. We will have to say henceforth, from the 1st of October, the company is not going to allow accumulation of 180 days of leave. We will restrict it to 30 days or 45 days. For the past leave you have already accumulated, we will pay based on basic pay. We will encash it at the existing. Otherwise, what happens? You will have to pay for the past leave at the increased rate. So keep that in mind. This is going to be an additional financial burden on the company if the existing policy on leave encashment is not changed. If action to encash the existing leave to the credit of employees is not taken before the law comes into force. This is something which we cannot procrastinate and postpone it to another day as finance professionals or as HR professionals. So accounting treatment. Once again, I am not expert. I've just taken it from the internet. How do we account this liability? There are two ways on how we are treating this. Past service cost, how we are restructuring the salary. Past service cost is one way. The other is other comprehensive income. Let's look at these two. Let's say my company, the current basic pay is 40% to CTC, but I don't want to restructure my existing components of salary, but I will pay gratuity on 50% of CTC. That means I am not restructuring it. I am leaving it as it is. Then I'll have to provide for past service cost according to para 102, 103A and 104 of Ind AS 19. This is an Indian accounting standard 19. For that purpose, this is the way in which we need to provide for past service liability in the books of account. So what is the past service cost? It is a change in the present value of the defined benefit obligation resulting from a plan amendment or curtailment. This is an amendment which we are planning to our existing gratuity structure. 50% we are going to pay instead of 40%. This is an amendment we are bringing in the change in the present value. Then paragraph 103A says an entity shall recognize past service cost and as expense when the plan amendment or curtailment occurs. We'll have to recognize it as a past service cost immediately. 104 says a plan amendment occurs when an entity introduces or withdraws a defined benefit. We are introducing a defined benefit here. We are not withdrawing. We are increasing the benefit. So we'll have to treat this as a past service cost if we are not going to restructure the salary in line with the new definition of code on wages, but decide to pay 50% of the total CTC as for the purpose of computation of gratuity. The other way of treatment is other comprehensive income. Let's say the company decides to restructure the salary components. Basic pay will be 50% or more of the CTC. Then the impact is to be treated as actuarial loss according to para 128A of the Ind AS 19 and will be recognized in other comprehensive income. What does this 128A say? Actuarial gains and losses result from increase or decreases in the present value of the defined benefit obligation because of changes in actuarial assumptions and experience adjustments. We are making a change in the present value of defined benefit by increasing the basic pay. This is an actuarial loss which will happen to us because of this. There is no actuarial gain. And what are the causes for actuarial gains or losses is we are increasing the salary benefits. That means instead of 40% basic or DA for the purpose of calculation of gratuity, which was existing now, we increased the basic pay to 50%. There is an increase in salary as far as payment of gratuity is concerned, which is actually covered under para 128A of the Ind AS 19. So let's look at the accounting treatment, some more things which we have to look at. Maybe you can read and understand it better because you are experts in this domain. I am feeling a little bit embarrassed to talk to all the chartered accountants on this subject, not being a finance guy or accountant myself. What it says is under Ind AS 15, this only the verified past service cost is recognized in terms of past service cost. Non-vested past service cost is carried over to the balance sheet to be recognized over the balance vesting period. This is spread across few years. Under Ind AS 19, all the past service cost is recognized immediately as a P&L item. Under Ind US GAAP, the past service cost is amortized over the expected future working life. How is it treated in profit and loss account? The vested past service is recognized in P&L immediately in the same year. Here, all of the past service cost is recognized immediately under Ind AS 19. Here, under US GAAP, it is amortized and recognized in the PL over the expected future working life of the employees. Accumulated other comprehensive income. There is no impact under AS 19 or Ind AS 15 or Ind AS 19. Here, under US GAAP, the balance of the amortized cost is carried forward in the accumulated other comprehensive income. Balance sheet, non-vested past service cost is carried over in the balance sheet. Here there is no impact. Here under AS 19 there is no impact. Under US GAAP, no impact. Let's look at how the accounting treatment for the other comprehensive income. Other comprehensive income under Ind AS 15, it is not applicable. However, this amount will be treated as actuarial loss. Under Ind AS 19, the impact will be taken to actuarial loss under experience and will be a part of the other comprehensive income which will be carried in the books of accounts. Ind AS gaps, I did not get anything. Under profit and loss account, the actuarial loss is recognized in the PL immediately. And here there is no impact to P&L. Under US GAAP, 1 year of amortized cost is recognized in the PL over the expected future working life from the next year. Accumulated other comprehensive income, US GAAP. What happens here is the accumulated other comprehensive income will be amortized over the expected future working life. The balance of the amortized cost is carried forward in the accumulated other comprehensive income. As far as balance sheet is concerned, there is no impact. Let's look at the last one or two slides, last slide rather, on code on social security. The other two are very minimum, we can complete in no time. Here, we'll have to look at the impact of new definition of code in other areas, which we not looked at other areas here. Let's see, here is an example. Basic 12,000, statutory bonus 3,000. This is all per month. House rent allowance 3,000. Conveyance traveling allowance 6,000. Special allowance 6,000. Total salary is 30,000. Earlier, as per the wages, earlier means currently, this is the future. Future, the wages as per the code will be basic plus special allowance, 18,000, which is more than 50% of 30,000 CTC. So you take 18,000 as the wages under the code on wages. How it is treated now? Under Minimum Wages Act, basic special allowance when HRA is taken consideration, it is 21,000 rupees. Under Payment of Wages Act, it is 21,000 rupees. Under the current Payment of Bonus Act, it is 27,000 rupees. Now you understand what is happening. Under the current Payment of Bonus Act, this individual employee is not covered under payment of bonus. But under the new code on wages definition, he will be covered under payment of bonus. See, this is also a hit on us. Each case we'll have to look at separately, depending on the various components of his salary, and arrive at the definition of wage under the new code on wages. So earlier he is not eligible for bonus because his salary was 27,000 rupees. Now it has become 18,000 rupees. He is eligible for bonus under the new code on wages. Under the existing EPF, this fellow is 24,000 rupees. Now it is getting 18,000 rupees. That means his contribution under the EPF will come down actually, if you look at it. But these are stray cases. These are not the cases because 50% will invariably be more actually. Under the Payment of Gratuity Act, earlier it was 12,000. That means we were paying gratuity only on basic 12,000 rupees. Now we'll have to pay gratuity on 18,000 rupees basic plus special allowance. Or if there is no special allowance, this is some other excluding allowance, you'll have to pay on 15,000 rupees. Your gratuity liability is going up in any case. Wages as per the current Maternity Benefit Act, as we have seen the earlier example, instead of 27,000 rupees, the women who are under maternity leave will only get 18,000 rupees per month. Wage as per the current ESI Act is 27,000 rupees. They are not covered under ESI scheme because ESI scheme envisages coverage only up to 27,000 rupees. But now under the new definition of wages, these employees will, this employee that his salary is 20,000 rupees is covered under the ESI scheme. So your liability of ESI at the rate of 3.25% of 18,000 rupees is kicking in. Your financial burden will go up, your employee cost will go up. Now we will take some questions. I have to go very fast. I'm sorry because we are running short of time. Any questions we will take quickly. Huh?
1 minute.
Over to you, Mr. Selva, for showing the questions to me.
Yes, sir. 20.
I can see the questions. Thank you so much. The overtime will be payable to employees if they are in managerial cadre, provided minimum wages are declared for that category of employees, not for all managerial employees. If the government declares minimum wages for any particular managerial category of employees, then such people are eligible for overtime. That's what I said. Wages code, what about medical personal accident insurance, ESOP? So I didn't get this question actually. I'm sorry about that. Wage code, what about medical? I didn't get the question. I'm sorry about that. So for deputation employees, duration will be 3 to 24 months outside India. Will they eligible to get PF? Once again, they fall under the definition of international worker. No? Now the new law, they have not mentioned about international worker. If an international worker, let's say if some employee from our company is deputed to another country and we have a social security arrangement with that country, he will continue to be covered under Provident Fund here and he need not pay contribution to the social security scheme in that country. But if there is no social security arrangement with that country, he'll have to contribute there, he'll have to contribute in India also. That's the current law, but we'll have to wait for the new law to come in. Will ESI is mandatory if company is having corporate insurance cover? Yes, you have a corporate insurance cover. ESI is compulsory for the people who are drawing a salary of less than 21,000 rupees. Unless you apply to the government to get exemption, say that we are running a hospital like BHCL or any public sector organization where they provide massive medical facilities to them, where they provide hospitals to the employees, where employees can be admitted, super specialty treatment is provided to them. In such cases, the exemption can be granted, but not in all cases exemption will be granted to employees just because we have taken a corporate insurance cover. That is not a case for exemption under the ESI scheme. Payment of PF was capped at 18,000 rupees. Is it changing? It is capped at, yes, it is 15, it is 12% on 15,000 rupees. It is 1,800 rupees. As of now, it is 1,800 rupees only. It is not changing as of now. Unless the government comes forward and then says, this is an old eligibility limit, we are going to change it because this is there already for 6-7 years. In all probability, they may change it. But now it is capped at 1,800 rupees. But many companies pay Provident Fund on the full basic salary. Concept of national extension of employer's premises. Can it cover an accident while the employer is on work from home? Very, very good question. In fact, I did a program for the Bombay Chamber of Commerce on this subject. I did quite a lot of work on this. Maybe in India, there is no such provision. But in many countries, advanced countries, developing countries, there is a provision. Say, for example, if an employee is working from home, let's say in one case in United States of America, this employee, the dog was sitting behind her and she got up to go to the her kitchen and pick a cup of coffee. She did not see the dog. She tripped on the dog and she fell down. She fractured her leg. The tribunals in United States of America said, yes, it is an employment injury and the employer is liable to pay compensation. There are several such judgments in US, Canada, some of the European countries. There are judgments and that's a completely different subject. Maybe the government should take cognizance of this. This is a very good question. I appreciate whoever raised this question because today work from home has become the order of the day from March 17th, 2020 after the pandemic. We don't have laws to cover that. And in United States, Canada, and other countries where this law is there, it is the responsibility of the employer to ensure, go inspect the home of the employee, whether ergonomically developed chair is there, table is there, all facilities are there. Is there any cause for tripping of this employee while at work? They'll have to examine. In India, unfortunately, we don't have that law. Maybe it can come in the near future. Can you please suggest a new salary package with the huge impact on gratuity payment? I wish I can do that, because every compensation structure in each company is different. There is no one size fits all, unfortunately. Each company has to do that. There are many consulting companies which are providing their services today, like Deloitte, Ernst & Young. There are some companies like Eon Hewitt. There are some companies like Mercer. They are all experts in this compensation restructuring domain. They are providing their services. Some companies have already hired them. Companies which have deep pockets have already hired these consultants. They are working on this restructuring their salary packages. Unfortunately, I won't be able to tell you any one size fits all. I've only shown you some examples, and maybe if any company shows their individual compensation structures, I'll be able to help them how to restructure. But there's no one size fits all approach which can suit to everybody. So then wages code, last question is, will medical insurance and personal accident insurance provided by employer to employees be considered as wages? Some company treat this as part of CTC. As far as the exclusions are concerned, this is not part of CTC. No, it's not given there on the 9 exclusions. So it cannot be treated as even if some companies treat it as part of CTC, they don't have to treat it as part of CTC for the purpose of arriving at 50% wage definition. This can be excluded. This only those 9 which are specifically mentioned in the slide which I've shown you on the definition of wage are to be reckoned. There could be many other allowances like hardship allowance, some disturbed area allowance, all coffee allowance, this allowance, that allowance, tiffin allowance, breakfast allowance. They are all not part of CTC as far as the definition of wages under the code on wages is concerned. I hope that satisfies the explanation. I think we'll quickly go on to the next part of our these are fairly, I don't have many slides after this. Let's quickly go through this. Oh, I'm sorry, other definitions. We will see employee definition. We have seen employee also. I told you in Provident Fund Act, there is a limit. In ESI Act, there is a limit. In Employee Compensation Act, only those employees who are mentioned in the schedule, second schedule to the employee compensation in the Code on Social Security, they will only be covered. Contractor, we have already discussed. And impact of new employee definition on PF and ESI, we can quickly look at this before we go to the other definitions. Here, basic wages are 14,000, house rent allowance 6,000, conveyance allowance 6,000, special allowance 4,000. What is that here coming, which is coming into picture here is wages to be considered for PF, existing law because of the judgment of Vivekananda Vidya Mandir, basic wage plus conveyance allowance plus special allowance should be considered for determining the payment of Provident Fund contributions. Now it is 24,000 rupees on which Provident Fund contributions are to be paid. If he is already earlier covered under the Employee Provident Fund scheme, if he is not covered earlier, he is exempt from Provident Fund scheme because he is drawing more than 15,000 rupees. But let's look at Social Security Code. 14,000, 6,000, 6,000, same amount. But then what is happening? The total is 36,000 rupees. These are all excluded. You take A plus D here, 14 plus 18,000, it is 18,000. Otherwise, if this is something else, this is also excluded, it may become 17,000. So that is how we'll have to look at. For ESI purpose, it is now 30,000 rupees here, but that fellow is not covered under ESI because he is already 30,000 rupees. He is not covered because its threshold is 21,000 rupees existing. But what happens is salary goes to 18,000 rupees under ESI. So this gentleman is not covered here. He suddenly gets covered under ESI. That means our liability is 3.25% on 18,000 rupees on all these employees. There is an additional burden which is happening. Let's quickly look at gig worker. Gig worker means is a freelancer or a temporary employee who is outside the scope of traditional employer-employee relationship. That is a gig worker definition. Fixed term employment, you know, the employment is for a fixed term for a fixed purpose. There is a written contract of employment for a fixed term. Platform work. Platform work is those people who use online platform to access the other organizations, and they also help solve specific problems or to provide specific services in exchange for payment. Say, for example, Uber, Zomato, Urban Company, Ola, Amazon, those delivery executives, Delivery, which is a company, all these people who work for them are platform workers. Then who is an unorganized worker? A home-based worker, people who roll BDs, women who take garments home and stitch for some of the fashion houses, some self-employed worker or wage worker in the unorganized sector. Who are they? Any of those fellows who are not covered under the ID Act or Provident Fund. The company doesn't have 20 people. State insurance, they don't have 10 people. Gratuity is not applicable to them. Maternity benefit or employee compensation is, they are all unorganized workers. They have special social security benefits for these people. So let's understand the implications of these contributions to be made to gig workers or platform workers by these new age companies, which are actually mushrooming every day. And some of them are, as you know, are now actually valued at billions of dollars, like the Zomato, which we had recently. So they'll have to, the government has to create a social security fund for gig workers, and the companies who are employing gig or on-demand workers or platform workers, they'll have to allocate 1 to 2% of their annual turnover or 5% of the wages paid to gig workers, whichever is lower, to the social security fund to be constituted for gig workers. This is the contribution these companies have to pay into this social security fund. So the social security fund will be providing them medical, maternity, disablement, and other benefits to this gig platform or unorganized workers. The government also will contribute to this social security fund, apart from the contributions from these companies which are employing gig or platform workers. Let's look at the implications further. Companies like Amazon, Flipkart, Ola, Uber, Urban Company, they rely heavily on gig workers. We all know that. And they approached the Ministry of Labor seeking clarification on the definition of turnover, because they will have to pay 1 or 2% of turnover. What is this turnover? How do we calculate turnover? Because they were afraid, do we take the turnover only for the business area where we are getting revenues by hiring gig or platform workers? We have other business income also coming from there. Only the business income which is coming out of employing these gig or platform workers, that should be considered as turnover. That's a question which the Ministry of Labor is yet to clarify. We are waiting for the clarification from the government through a notification or through the schemes which are going to come under the Code on Social Security. What are the employer's obligations? They will have to identify wages. Then they will have to deposit these social security contributions on time. They will have to provide the social unorganized workers and all, they'll have to pay the contributions. They'll have to report fatal accidents and serious bodily injuries under the employee compensation scheme. Then the Employment Exchanges Compulsory Notification of Vacancies Act is merged here, and there are career centers which are created here. The employees have to notify vacancies to these career centers, which is only a refined version of the employment exchanges. You all know how employment exchanges worked so far in our country. Now this is a old wine in a new bottle. We'll have to wait and see how it will work. Maintenance of registers and records on electronically can be done. Issue of wage slips are to be done. Display of notices are to be done, and electronically reports can be filed, and dues are to be paid to the eldest serving member or nominee or legal representative of the employee. There are offences and penalties. Once again, the offences and penalties have become stringent. For the first time, the offences and penalties, the government can be lenient, they can compound it, but if it's the second offense, the penalty is going to be very high, which we need to take note of. Now, what are the areas of focus for the finance professionals and HR professionals under this Code on Social Security? Understand the provisions of the Code on Social Security and identify changes that are to be required to be made, like gratuity, how do we restructure the wage, what would be the thing on leave, how we should handle the future liability, how do we reduce our liability, what is the financial impact we quantify, and what is the extension of gratuity entitlement to fixed term employees, what is the impact on expatriates. Each company, based on the type of workers or employees they have, they'll have to arrive at this assessment. They'll have to communicate this to the stakeholders. Maybe our board wanted a presentation from us in terms of identifying what is the financial impact as a result of these changes. We made a presentation to the board in the last board meeting, and we'll have to tell our finance professionals, our MD, what would be the likely impact, financial impact. Then we'll have to review the third party contractors and all, what would be their role and how do we reduce our financial burden on that, what is that steps they need to take. And we need to balance this with the Income Tax Act. Blindly, if we adopt the reviewing the compensation structure, the employee's income tax burden may go up. So you need to do a actually tightrope walk in terms of how do we reduce, keep the income tax liability less, and yet ensure the liability under Provident Fund, gratuity, and all other enactments also to the minimum extent. That is what we need to do a tightrope walk. Both the finance and HR professionals in every company should work out that. And the retirals of the employees, you can't negatively impact them. You can't do that. So that also we need to look at. So we need to ultimately inform the employees of how will their salary look like and what are their entitlements under the new labor codes once they are implemented and given effect to by the Government of India. So let's quickly, are you okay that we continue, because it is getting close to, it's already 8 o'clock. Mr. Selva, is it okay?
No problem, sir.
It doesn't take much time, huh? Is it okay? People still have patience to listen to me?
We have close to 100 plus participants still on this.
We can continue or we can close?
We can continue, sir. Maybe we can rush up for next 15 minutes. We can
rush up. Yeah, I'll quickly. There are not many
close
slides.
to 100 plus participants on the session, so we can continue.
How many?
100 plus, 108 are there actually.
Okay. See, the Code on Industrial Relations, this is not very relevant to the finance professionals. I'll quickly run through. Standing Orders, Industrial Employment Standing Orders Act, which it defines the service conditions of the workmen, is earlier it was applicable to 100 or more workmen establishments. Now it has been made applicable to 300 or more workers. Definition of industry has undergone a change. Now establishments which are substantially engaged in charitable or philanthropic services are exempted from this definition. Earlier, because of the Bangalore water supply judgment by the Supreme Court, even charitable and philanthropic organizations were brought under the definition of industry. So these people can actually file industrial disputes, challenge their dismissals, file claims for their payments in the labor court and industrial tribunals. Now they are taking away that if the organization is substantially engaged in charitable or philanthropic services. Reference of disputes. Earlier, disputes can only be referred by the appropriate government unless it is a dismissal, case of dismissal. Now there is no reference. directly the worker, after following the grievance redressal procedure, going to the conciliation officer, he can approach the labor court. There is no failure report required. Directly they can approach the labor court. This will increase the litigation. Re-employment after retrenchment. If somebody is retrenched from service, he has a right to come back if a similar position falls vacant in the company at any given time. There is no limitation on time. Now they said if such similar vacancy falls vacant within 1 year, then only you have a right to seek re-employment. Earlier, notice of strike is mandated only for public utility service. 14 days notice before striking and 6 weeks before, within 6 weeks they should go on strike. That was only for organizations declared as public utility service. Now every company, whatever size it is, if the trade union or workers want to go on strike, they'll have to invariably give a notice. Otherwise, this strike is invalid, is illegal. So approval for layoff, retrenchment and closure, these two are contentious with the trade unions. What they are saying is you are bringing hire and fire by doing this. You are taking away our right to strike. And earlier, if I have 100 or more workmen in my establishment, I have to take permission from government to lay off or retrench or close my establishment. Now the new law says only establishments employing 300 or more workmen will have to take permission from the government. This is a sore point for the trade unions. Recognition of trade union, earlier there was no provision under either the Industrial Disputes Act or Trade Unions Act, but there was some state laws like Maharashtra Recognition of Trade Unions and Prevention of Unfair Labor Practices Act, MRTU and Pulp Act. It provides for recognition of trade unions. Now the new law code on industrial relations provides for recognition of trade unions and establishment of negotiation councils. I will not go deep into that. That's a deep subject. Sales promotion employees and working journalists, as a result of the judgment of Sandoz India and May and Backer, were excluded from the definition of workmen under the industrial dispute. Now they have been specifically brought under the definition of workmen under the Industrial Disputes Act. Earlier, there is no time limit for raising industrial dispute. Somebody will come out and raise an industrial dispute. I was dismissed from this company 20 years ago. Please reinstate me. I don't have any records in my company whether this fellow, and nobody who was working at that time was alive in this company. Now there is a time limit for raising an industrial dispute, that is 2 years. This is a welcome relief for the business actually. There is a worker reskilling fund which will be created by the government for all retrenched workmen, and the company has to contribute 15 days of wages into this fund. This fund is to provide some kind of a financial support to this individual workman to upgrade his skills by joining a course where he can learn some skill so that he can become employable once again after retrenchment. Earlier, if people go on mass casual leave, it was not considered as a strike. Now the code explicitly mentions if 50% of workers go on a mass casual leave, it will be considered as a strike. That means an illegal strike under the new code on industrial relations. Let's look at some of the impact which could be of interest to the CAs and the finance professionals. Let's say earlier my philanthropic activity is not considered as an industry. Now what is happening? If CSR is being carried out by the company, 2% of contribution under the Companies Act is mandatory for companies which are making profits. So now, if I am doing an in-house department, my CSR I am operating, then I fall within the definition of industry. Those people are workmen within the ambit of code on industrial. But I've created a separate trust, or I am supporting an NGO, and I am contributing to that. My CSR contributions are going there. That is an establishment completely substantially involved in philanthropic and charitable activities. The code on industrial relations will not apply to them because of the change in definition of industry. So this is something which you can advise industries to how to handle their CSR post the implementation of the code on industrial relations. Some powers to the industrial tribunal was given. They can actually give an order for interim relief. Somebody is dismissed from service, he goes to the court. court can say pay 50% salary, or they can say you reinstate him until the dispute is resolved. So this kind of reliefs are right to relief are given to the industrial tribunal in the new law. And for conducting the union elections or verification of membership of union, there are certain obligations on the employer which involves some financial commitment. They'll have to fix the date of verification of for deciding the representative union or deciding the representative negotiation council, appoint a verification officer, and they'll have to bear all the expenses. Let's say if a company like Relevance is having thousands of workers, if they have to conduct a verification process, what would be their total cost if they'll have to do that? And they'll have to deploy some electronic process for conducting the election over an IT application or online platform. That is the responsibility of the employer under the new code on industrial relations. They'll have to provide certain facilities to the negotiating union or council. That is a notice board. Now also companies provide notice board to the union. They'll have to provide facilities to these union office bearers to conduct discussions among themselves. Or they'll have to provide a facility of office. I'm sorry, if they'll have to provide a facility for entering outside the office hours to the office bearers of this negotiating council when they are not on work, to talk to the management representatives to represent their grievances to the management. Some other facilities will have to deduct subscription of the trade unions based on the written consent of the worker. There is also a provision for treating on duty and any office bearer if he is working on union matters or negotiation matters as per the mutually agreed schedule. So any industrial establishment who is having 300 or more workers, they'll have to provide an office accommodation to the union members negotiating council at their own cost. These are additional costs on the employer which were not envisaged earlier. So impact on retrenchment compensation, let us look at. Retrenchment compensation is coming down. Let's say earlier retrenchment compensation is payable on the total salary. Now compensation for 10 years. Earlier it was 1,42,500 rupees. Now it is payable on 14,250 and it comes to 71,250 rupees. Impact on layoff compensation is also similar to that. This retrenchment compensation for every 15 days, for every completed year of service, 15 days of salary should be paid. Here, layoff compensation is to be paid at 50% of the salary. That means it works out if an employee's salary is 28,500, layoff compensation as per the existing law is 14,500. But as per the changed code on industrial relations, what is that? It comes to 7,125. It becomes half of that. So in these cases, the liability of the employer is coming down as far as the payment of layoff compensation and retrenchment compensation are concerned. What we will do, we'll take questions at the end of this. Few more slides only are left. We will take if there are any questions. The last code is code on occupational safety, health and working conditions. What is that this talks about is, earlier we had to register under Factories Act, we have to register under so many acts. Now all those registrations are not required, single registration is there. Contract labor earlier is to be prohibited by under section 10A by an advice from the Contract Labor Advisory Board to the Government of India. A notification is issued. Now what they are saying, contract labor is prohibited in any core activities or any activity which is essential or necessary to such activity. Automatically you can't employ contract labor in core activity, but there are exclusions which are specified in canteen, watch and ward, the people housekeeping, all those are excluded. So who is contract labor? The law defined, we have already discussed about that. Welfare facilities, contractor was earlier responsible for providing welfare facilities to his workmen. Now facilities like providing canteen, restroom, drinking water, first aid, all that has now come on to the head of the principal employer under the new OHS and working conditions code. interstate migrant workmen, especially after that the lockdown, many people started, the migrant workmen were on the street, some walking back to their states. So what the government did was, earlier there was no journey allowance for this interstate migrant workmen. Now the organizations have to pay journey allowance once in every year from their hometown to the place of work, in respect of all those interstate migrant workmen whose salary is less than 18,000 per month. That is what is the new law talks about. This is an additional financial burden because many industrial establishments employ these migrant workmen, especially in developed industrial areas. Leave with wages, earlier the required timeline for an employee to be eligible for leave with wages is 240 days in a calendar year. Now it has been brought down to 180 days. So people who have an attendance of less than 180 days will also become eligible for leave with wages. So number of people who get leave will increase. Now our liability also on financial liability on leave will go up. As I told you, leave encashment, no provision for leave encashment exists earlier in the Factories Act. Now leave encashment beyond the stipulated the carry forward amount can be availed at the end of the year. This is an additional financial burden on the company because we'll have to mandatorily encash the additional leave which remains unutilized at the end of the year in respect of each employee in the organization. Earlier, health checkup was mandatory to employees who are working in hazardous and other stipulated processes. Now, any employee who is having more than 45 years of age, they'll have to be undergoing a health checkup once in every year. Earlier, there was no provision for issuing appointment letter except under the Industrial Employment Standing Orders Act. Identity card has to be provided. Now it is mandatory to issue appointment letters to all employees and workers. Overtime earlier was permissible in a quarter 50 hours. Now the overtime limit can be stretched up to 125 hours per quarter. Earlier, canteens are to be provided in industrial establishment where there are 250 workers, restrooms in case of 150 workers, safety officer for every 1,000 workers. Now that threshold is brought down. Canteens are to be provided in case of establishments having more than 100 workers as against 250 earlier. Restrooms in case of 50 as against 150 earlier. 500 in case of normal factory, earlier it was 1,000. In hazardous factories, it is for every 250 workers, one safety officer is to be provided, and for 100 workers in a mine, a safety officer is to be provided. This will push up our cost. All these things will push up our cost. Let's look at the impact on overtime wages calculation. As per the existing law, the overtime wages are to be paid on the entire salary of an employee, 28,000 rupees, 500 year overtime should be taken. But under the new law, it is only 50% of the CTC or basic plus DA and other allowances, whichever is higher, 14,500. But more people may come within the ambit of overtime. So this is what we need to look at it. And what are the actions to be taken by an employer? We'll have to review our salary structure immediately, looking at and have a plan in place. If we don't want to look at this, looking at the code on wages and also looking at the income tax benefits to be extended to the employees. And we'll have to align the labor codes with the tax laws. Next is what we'll have to look at, what is the impact on retirement benefits because of provident fund gratuity and leave encashment, which we have already looked at the actuarial valuations, how they need to be handled. Then we'll have to look at the financial impact, wage definition. How will it will hit our financial statement because provident fund, some other things are going up, and extension of coverage for overtime will have an impact on P&L, who all will now be covered under the overtime as per the minimum wages definition. What would be the overall financial impact? And lastly, we'll have to identify the gaps in our current policies and procedures and map that with the compliance requirements in the labor codes. And what is our exposure in terms of these gaps in the existing policies and processes? How do we build those gaps? And how do we build the required technology? If we are already having technology like SAP, PeopleSoft or Darwin Box, whatever it is, how do we actually reconfigure the existing technology to take care of these compliance requirements envisaged under the code? This is the end of my session. Any questions you have, I will be happy to take. And I'm really sorry I had to go beyond the time because this subject is like that, and I never expected this will go on to so much of time. So let's take any questions if you have.
We have
I
two
know
questions.
you're also exhausted. It is 8:15, and is
These
working
two-
4-day work week going to be implemented in India, which can help? I don't think we are looking at implementing. Maybe my friend Mr. Ganesh can throw some light on that.
Yeah,
At
I
least
think there is no such inkling in the existing code at
Yeah.
least.
Yeah. Does the contract worker get included in the number of workers? Contract worker doesn't get included in the number of workers. It is only the regular workers. If you're talking about the code on IR, how do we calculate that threshold of 100, 300? Contract worker, we are not the employer for contract worker. No, contractor is the employer for the contract worker. We are not the employer. There is no master and servant relationship under law between a contract worker and the principal employer, the establishment. So I think you are all exhausted. No more questions are coming through. So thank you so much for this opportunity to the Southern India Regional Council of the Institute of Chartered Accountants of India. Thank you so much, Mr. Ganesh and Mr. Selva. And thanks to all the participants for putting up with me and listening patiently to my monologue for such a long time. Thank you so much.
Thank you, sir. So we would like to thank you for the very, very extensive and very informative session and the deep drill down from both the speakers, the wonderful drill down on the topic, the new labor law code, and also for giving us a wide range of provisions along with the detailed analysis with the explanations and with figures, so that would help the participants as to understand the concept and the topic much in a much clearer fashion. We would like to thank you very much for your time, sir. And I would like to thank all the participants who are with us here today for their active participation and active attention in the meeting. And I would also like to extend my thanks to the executives of SIRC office for their wonderful coordination for the program. Thank you all.
Yeah, thank you, Naresh Garu, for accepting my invitation. Actually, I thought you were the right speaker for the topic, being a person from the industry. I would have, yeah, I know, but I would have done my lawyering over the provisions, interpreting, breaking, and all that. But you have shared your experiences from the industry, which are relevant for the participants. So, in fact, I have also been updated on some of the industry practices by acting as a co-panelist speaker on this session. Look forward to meeting you, in person in the nearest future. Thank you, Ganesh, and thank you, Selva.
Thank you, sir. Welcome, sir. Sir, one information that many participants are asking about the deck. Can we share the presentation with the participants?
Yeah, please go ahead. That is all in the public domain only. I have not done anything different. Please go ahead and share. It's for information. If it can
It's
help
about
a large
dissemination.
number
The
of people,
purpose of this session is dissemination of knowledge. So I think sir will not object to.
Absolutely.
Along with the
Feel free
recordings.
to share that. Only thing is you may have to compress it. It is 6 MB or MB or something.
Yeah, we can convert it as a PDF file and we'll share it with them, sir, along with the recording. Thank you.
That's better. That's better. Please go ahead.
Thank you, sir.
Thank you so much. Then thank you, everybody. Thanks to all the participants. Thank you. I don't know how many of them are left at the end of the session. Thank you so much.
Yeah, still about 83 people are logged in. So
okay, you can see that.
They are eager to listen. Okay. Thank you. Bye.
Thank you.
Thank you.
Happy weekend to all. Happy weekend to all.
Thank
Bye.
you. Thank you.